Hey everyone, hope you're having a fantastic Sunday. Just hanging out here. We should get started in about 15 minutes with Nic Chahine and very simple concepts that can literally double your money as a professional trader. My name is Jonathan. I've been with Benzinga for about 5 years now and work with Nick and some of our other Benzinga products. So I'll be one of your hosts for today. And I will see you back here in about 15 minutes. In about 15 minutes with Nic Chahine and very simple concepts that All right, everybody, let's go. It's about that time for us to get started. So let me know if you can hear me okay in the chat. Check. We got YouTube, we got Zoom going here, and this should be a great session with Nic Chahine. He'll be here any minute. So make sure that you have your pen and paper available or whatever you're using to take notes, because this is going to be an awesome session on how to make money with the Benzinga Options Mentorship with Nic Chahine, but more importantly, more than just specifically how to follow Nic's trades, it's more about the concepts that he teaches that you're going to learn a little bit more about today with a changing market, and how you can win consistently, win more in really any market. And you'll see that a lot of that has to do with not losing as much compared to how much you actually win. So we'll get more into the math and the nuts and bolts of that in a little bit here. I see Alec, I see Doc, Aaron, welcome in the chat, as well as, let's see here, we got Boris, Alex, Elton. We got a bunch of people in here this afternoon. So let me know where you guys are at in your trading journey with options. Are you a complete beginner? Maybe give me a number 1 if you've never made an options trade. Give me a number 2. I don't know. Just rate yourself on a scale from 1 to 10. 1, never made an options trade. 10 is like you're an absolute expert. You're like a licensed professional or something. Let me see that in the chat. That'll just give us a better idea of where we're at, who we're talking to, let's see here. I see a lot of 1s. All right. Well, glad that you're here, 1s, and then some people in between. VJ 4, Jeff 6, Vernon 1, Josh 4, 4, 6, 3, but lost a lot. Yeah. I mean, how many of us? I mean, any of us that have been around for a little bit have probably blown up an account. But the whole point of being here today is to prevent those of you who are number 1s from blowing up an account, from losing a significant part of that hard-earned capital that you have to invest in the market, that you have to trade. So that's what we're here for. Paul is asking, how's this better than scalping options? No theta, no delta, no Greeks at all. Profit, no holding, risk. Paul, to be honest, I don't understand your question fully. Maybe I'm not the sharpest tool in the shed. But if you could rephrase that question, I would love to answer that. Hey, and here he is, the man of the hour, Nic Chahine, everybody. Nic, how you doing, my man?
I'm good. How can I help? You have a question you don't know how to answer. How can I help?
I was going off of a question in the YouTube chat that I just didn't understand. But it looks like we have a lot of people in here. Is your video working?
Yes.
Okay, awesome. There you are.
Sporty spice. All right. What's going on?
Yeah, man. Just I was just asking everybody what their experience was with options, and there's quite a few people in here today that have never made an options trade ever, as well as some intermediate people. Okay. A lot of 4s, 5s, and 6s. I just told them to throw a number in there on a scale from 1 to 10, with 1 being never made a trade.
I'll make it easy then. I think the way we want to, given this information, we probably want to not ignore the new people and give them enough to get the taste and the curiosity to pursue it more. And of course, offer the opportunity to be the ones to bring it. And then also entice the ones that are good with options and have traded before to come to our community, because we kick ass. So not because we make the best calls, because we provide the medium where 300 traders are actively trading every day. And it's not the typical Discord noise, everybody shouting out stuff. I'm the only one that's using this mic. I'm the one sharing the screen. And I'm proposing levels on the major indices and tickers. And then if somebody wants to pursue one thing or another, a whole bunch of people contribute. Nobody posts a win without actually having posted the entry point first. So it's unfair for say, oh, I just closed 1,500%. It's like, why didn't you tell us?
Right.
Why
Thanks,
are you
bro.
why are you telling us now? We don't care. No, we do care, but it's just not cool. So yeah, that sounds good to me. So running around today like a chicken with its head cut off, because I'm trying to swing so many things. So as you know, in the part of the services, I provide a lot of things. A couple of them are on Sunday. Yes, we do work on Sunday. So Friday, when the week ends, I send out a list, a form for the members to give me the tickers they want to review. And then on Sunday, I review them after having done the homework ahead of time. So Saturday, I spend hours going through the list. Can I share my screen?
Oh, yeah, go for it. I just shared mine, but I'll stop sharing.
Oh, you can go ahead. I mean, I'll take it over when you're done.
I was just kind of showing what you were talking about, where it looks like you covered 144 companies this morning.
There was actually a couple more because people threw some names in there, one of which was Twilio at the last minute. So that's the list right there. And it is indexed, alphabetical, broken up into 3 different videos. So that's easier to scroll through. These links are live, to a sense where it pulls up a picture and my comments are there. So it's a static picture, but it is a picture nonetheless with lines. So you can take it and then come back to me and say, hey, updates on these. So it is, it's a lot of work and it's a big commitment, but I do it gladly because I'm seeing immediate results, and I'll share some of those with you. The first being, there's no shortcut to success. You have to do the homework. And I don't mean to maintain 140 tickers. So Saturday, I was compiling the list. There was one person who asked for 72 tickers. One guy. So believe it or not, that is not my record. I had 82 requests before from one person. Thank God they overlapped. When I first pulled it, it was the first pull I got, people were still submitting. He was 90% of all of them, and he didn't have anything overlapping. He's like, oh my God, I'm going to have to cut some tickers out. I only cut out a lot of the oil stocks because the answer is the same for all the oil stocks. If you're trading them, great. If you're investing for the long term, I think you're making a mistake, but that's an opinion. Okay, so having said that, Sundays are busy, even though it should be relaxing. So Saturday is somewhat my relaxing day. Other than fighting other people physically, it's a relaxing day. So today I did the video for the homework for the week. And then tonight I will do the homework big picture. That'll be like a 9-10 minute video as to what the headlines can be, what are the levels to pay attention to, which headlines to ignore, and if something happens, what do we do in reaction. So far those videos to me are things I don't skip. I would do them for myself, even if I wasn't helping anyone. They're pretty important.
Absolutely.
It's pretty important to know the big picture. I mean, you can know stock ABC inside and out. You can be 100% certain it's going to rally. And then Snapchat comes out and poops all over it. It took down the whole market. Can you believe it? One stinking company that vaguely said they were going to suck, and the whole market falls apart. Because headlines. No, it wasn't the headlines. The price action was there. Snapchat was just the trigger for it. They didn't create new price paths. They just exaggerated or precipitated the move to happen faster or a little bit bigger. They didn't create a new path. Nobody thought things are getting better. Everybody knew the Fed was beating up on the economy, so everybody expected a worse economy. This stuff like Microsoft announced, blah, 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 that's not news. That's what Snapchat did before that, and probably 15 other companies before that. Everybody's saying the same thing. Jamie Dimon comes out and says, oh my God, expect a hurricane. Yes, that's what Microsoft said. Oh, that's what Snapchat said. Everybody's saying the same thing. It's the same headline, It's not news. We know the Fed is out to destroy the economy. Morons, but they are out to destroy the economy. Why are they morons? Not because they're raising rates, because they just fixed it and let it run a little bit hot. Anyway, so
it's too bad you don't have strong opinions about anything.
Yeah. I know I'm very delicate that way.
In terms of, with all these beginners, right? What I'm hearing from you, and just, Marco is asking, is this the best way to learn to go over hundreds of companies? You tell me if I'm wrong, Nick. As I watch you week in and week out, you start with the big picture. What's going on with the overall broad market, things that could affect on the macro level, things like the Fed, economic numbers, and then what are the indices doing? And then within that context, we can take a look at different sectors, different individual companies, and then just getting that repetition of your technical analysis, learning how to think about the market, kind of like a market maker does, is really...
You touched on everything I preach, and I'm very consistent. So I learned a long time ago, very simple truth, that markets usually don't need but three things to happen. One is actually them not being broken, so the structure is fine, and money flow, right, and sentiment. So those are the three things. Sentiment is how people react. You can't control that, but you know that it's a factor. Up until now, that was the only variable. Everything else was on autopilot, all the way bullish, right? And now suddenly money flow is bearish, because that's what the Fed controls, how the money goes around. They can't lend. They can make it easier to lend. That's what they do. They tighten rates, and they sell things off their balance sheet so that they're taking money out of the economy. So there's a problem of sentiment, people trying to adjust to the new thing, which was the other variable. So yes, you can't do anything without knowing. Like, if I knew for a fact that the S&P was going to crash on Monday, I wouldn't invest in anything on Friday. It's simple as that, right? Who wants to go along a jewel of a company at a bargain price? And hey, Emmanuel, is that the same Emmanuel from my gang? You don't need to be here. You know all this stuff. Okay.
Well, by the way, Doc's here too. He was hanging out with us last time.
Oh, okay. All right, then stick around, Emmanuel. Yeah, Doc is a pretty good guy. So you have to know that stocks don't trade in the vacuum. Regardless how much you like company A or B or C. I'm so sick of Amazon. I love this company. The same. Yes, I'll give you my sentiment. I don't trade it with options going into the split for one stupid reason. If you take 10 contracts, you end up having to close 200 contracts after the split. That is a lot of money to close. And if it crashes, that's 200 times the problem. So trade it afterwards. The split doesn't change the stock, the company. It's not going to make more money. Maybe it's a psychological thing that now more people can afford to blah, blah, blah. But everybody's treating it like this is the only split that's ever happened. Like, the company is on rails. I love the company. The new guy has to prove himself to me. I don't like the fact that the first time he come out, he had a stock buyback. What? That's your best idea? Buying back your own stock? What happened to Amazon? Flying vans? I don't know. Yeah, we'll talk about all of that. Khalid, the fact that everybody's hungry for tickers, that is what we do all day, every day. And I mean all day, every day. I'm in California. I wake up before the sun comes up by a freaking mile. I'm going to show you. That's the weekend wake up. That's the normal wake up. Okay, so I wake up in the 3s, which is fine. But what I'm saying is, by the time the market opens, I'm doing this already. We're sitting here. We have 300 people, maybe 280, 260, 310. And we're just finding setups all day. So
awesome.
We are talking stocks all day. But like you said, top down. What happens to the world? Then what can we do within that? And after that, what are the fundamentals? What are the technicals? Where is the opportunity? Is this a good time? Is it not a good time? How would I do it? Plus the setups. Every day, almost every day, a full-blown 20-minute video on one setup or another. Like, I think I'm going to bring back all the iron condors now, because we had a whole bunch of new people join. So I cut them off. I don't want people to jump in. Ooh, iron condors, let's go everywhere. I wanted them to learn a little bit more before I start sharing the iron condors. And those are money makers in, stagnant economy. Well, now we are trending within a range, so it is tradable.
Right. So, do you have those slides? You had
Yeah.
those slides that you used in the past. I think that's a great place for beginners to
Right. So
start.
I kind of have that. So I'm going to share some stuff with you. Let me share my screen. Where are you? This, I don't know who designed the Zoom. So I put the window of Zoom right here, and then you make a change and the window goes over there. It's like, wait, I have it here. And now I need to share. Where is the share screen? Share screen. Okay, there it is.
I have the same thing. I've got 3 monitors here.
Yeah, and the worst case is that I bought a new 49-inch monitor for sharing screens, and using Tradietics to find intraday setups, and that I think whacks everything out. Okay, so hopefully you can see my screen.
Yes.
All right, so I wanted to start with this because we shouldn't do anything before we talk about risk. And I'm going to annotate, believe it or not. Usually I have it as a flip thing, but I didn't want to do that. So before we do anything, I'd like to revisit the risk conversation, because it is now more important than ever. Why? Because of the VIX. The VIX is 1 billion or whatever it is. It's too high. That means there's too much risk and you have to acknowledge it. So your next trade, you should break up the conversation with yourself into 2 pieces. One, how big of a risk? And I want to suggest something. Don't ever average down in your entire life ever again. I don't know one professional trader that averages down. Nobody. If you're unsure, average in. So if you usually take $1,000 or $1,000 worth of risk right away, just split it in half. Take 500. Add the other 500 later. So average into a position if you're unsure about the level. Don't take the 1,000 and then the stock gets cut in half and then you add to your risk. You just made your problem bigger. It doesn't make sense. Average down. Leave room for error. Don't go all in. Never go all in. Why? The VIX is freaking high. The market makers don't know where it's going. That's why they price it high. And by the way, the VIX, the way I get it, it's the chicken. It's not the egg. So it's priced off of the options, which are priced based on what the market makers think price is going. And they don't know. They just know it's going to be big down or big up. So how do you know when they don't know? Don't go all in. So habit number 1, average in, not down. So reduce your size. That's number 1. And then the conversation is give yourself odds. What are the chances of me winning or losing? So that's one part of risk. That's the better part. That's the part you manage. This one, not this one. This one, you make the decision and you move on. The odds. So why is this important? If you decide to take a position in Amazon today, you give yourself odds of success. You think, oof, I'm very comfortable that an 80% chance I'm going to beat the seller. What do you mean beat the seller? Well, you bought it, whatever it is. There was a seller on the other end who thinks you're making a mistake. So you're smarter than them or they're smarter than you. Give yourself an advantage. If you don't have an advantage, that means you're 50-50. You're coin flip. So how do you do that responsibly? Is you set a stop. So when you take a risk, first of all, you need a reason. Why am I taking the risk? Second of all, you need a plan on how do I get out? If things go well, how do I get out? And if things go badly, how much pain am I willing to take? So since you don't have a percentage, you need to make that pain level pretty clear to yourself. Luckily, with options, it's easy. I'll show you. It's a number you can read every second, and it changes every second, but it gives you an idea. We will use it as a real life example. Even if you don't trade options, you can take the information and use it to trade stocks. It's very clean cut way of taking out the guesswork to a degree. So when you say I'm managing my risk, you should be managing this part. The reason why you took the stock, that's your number 1. Let's say you take Amazon for the split. Nothing happens after the split. Why are you still long Amazon? Ask yourself that. If you took it for the split, after the split, if it doesn't do what you thought it was going to do, you should get out. And then if it's doing what you thought it would be doing, and then things change, you should look at, okay, so what are my odds now versus when I took it? And that's what should determine whether you stay in it or out. That is the easy process of one, having a reason, two, how to break up the risk, make two different conscious decisions, and then track the second part of that decision. If you don't have that process, I think you're winging it. So that's usually what I start with. And then I have other overheads that say the same things over and over. So number one, on purpose. So be purposeful with your trades. Don't ever take a position without any reason. I use it, I call it the NT. So the no trigger, no trade. So if you don't have a trigger, meaning a reason, technically on the chart or fundamentally, like if you think that Amazon is going to go up because of the split, you don't need anything on the chart. That's what you believe in. It's your right to believe. Then you take it. This way, if it doesn't happen, then you know that was the reason, and then you get out based on the reason disappearing. If it was because of a trigger on a chart, and I'll show you a couple examples, then if that doesn't happen, that's another reason to get out. But at least you had a reason. So I get too many questions where, hey, Nick, I'm down 90% on my calls. What do I do? How do I hedge it? Well, you can't hedge it. It's down 90%. How do you save it? And then we'll have a long conversation on that. So you shouldn't let it get there. You should have an exit along the way. It's not all in or all out. It's okay to be all in or all out, but you have to know, you have to be pretty damn good with the charts and the timing. So I kept track of all the credit spreads that I did in 2021. If somebody took all of them and didn't touch them, didn't even look at them, just took credit spreads, they would have had like 77% winners. And if they just closed the major wins, nothing major, it's like nothing too complicated. Oh, this is a big win. Just close those. You'll be up in the high 80s and low 90s. So it doesn't take much to succeed if you use a process, setting up the trades with high degree of success from the get-go. They pan out. All right. So I also want to share a few what happens. So during the day, first, let's recap. The service comes with me writing up the day twice a day. So if I go to the chat room here, you will find notes from me all day like this. Here's the note from Friday. 0663, the blurb about the day, charts for the day, who's reporting, charts for the ETFs and the two futures contract, the small, the E-minis and the NQ. And then also like who's reporting for the day, but on Friday there's no reports, so that was it. And then this is going on all day. The chat room is two-way conversation. Somebody suggesting they want to learn something from me, somebody else, yes, I would like to learn that too. So eventually I will do something to teach both of those things that they wanted. Although that specific thing they're asking for is kind of a secret sauce that takes years to develop, but I'll try anyway. So here, anytime, 24/7, you can just jump in, and on top of it, you have the whole tool that's available here. You can do whatever you want with that. But I'm available 24/7. I'm not sitting here waiting for you to post, but if I see a post, I'll answer it. During the day, yes, I'm here. Why? Because I am sharing my screen live in a place that looks like this. So this is a snapshot from Friday. You guys will be here Friday late at the market close. I still had 250 people. Let me see here. 264 from another day, 266. We've been as 318, I think the highest I've seen. But this is Friday. I figured I'd show you Friday. This is Ben. Hey, Ben, if you're there, sorry I outed you. Direct message in my live room, different than the chat room. That's the chat room static 24/7. This live room, I'm here during the day, all day, every day. So here, Ben is saying that was the fastest thousands he ever made, I think, because it was, I read the options late in the day, and on expiration day, it's money in the bank. And in fact, I said that on Friday, we need to close above 410 and you can take that to the bank. And we did. And I knew exactly where we're going to be at the close because of what's going on in the options market. Only one time have I been surprised lately, and that was last Friday, not this past Friday. The Friday where the market went ballistic before the 3-day weekend. I think Reddit had something to do with it. The option makers, the market makers were surprised based on me reading the options data late in the day on the SPY. things like this. Somebody here asked me earlier, is this intraday swings or longer swings? Yes is the answer. You want intraday? Stick with me here all day. We have like 6 million opportunities. Here's one of them. I drew this and I said support, and this is what happened. Boom, the stock falls and bounces right off. What is this? Google. So we have two or three people that trade Google all day, and they post their trades. I'm short Google, I'm long Google, and I think they use equities. They don't use actual, and they're girls, and they don't use actual. They don't use options, but you can. You can follow along. So I don't trade Google a lot, but I do track it for anybody that wants to see it. So that's another instance. Here's one, Buckeye. I'm saying that the best thing that happens in my room is the learning. I'm teaching what not to do. I'm teaching my method. I don't mind sharing. I don't have any secrets. I said it was a secret sauce, but I do teach it, but it's hard to get. I mean, I have a knack for numbers and geometry, and that helps me with charts and options. So if you're the same, then you may pick up on the things like Ben is picking it up. I can see it. And I spoke to him on Saturday in a sidebar. So I can see it. The questions, I can see the leveling up the game, so to speak. Other people are just happy taking the trades, which is fine. And they're not all my trades. Somebody says, hey, what do you think of shorting this? Oh, yeah, okay. Well, that looks good. So here's Smokey, got 40% on the SPY puts. That was based on, okay, me drawing this and then that playing out somehow. Sometimes, because now the SPX, I don't know if you know, the SPX expires every day. There's a contract that expires every day. So that's a home run potential every day on a lottery ticket. Late in the day, if you can read the options data, you can almost guess where the burst is going to happen. And if it happens, you turn 50 cents into $2 or $3. By that, I mean, if you spend $50, you end up with $300 or $400 with one contract. It's not a guarantee, but it does happen. Also, last Friday, I said, after the market closed, I'm selling a call spread for Tuesday morning, because Monday we're closed. And that means I expected a drop on Tuesday. Sure enough, boop, drop on Tuesday, easy money. I could have, after the drop, opened the credit put spread to make an iron condor. Now that sounds gibberish to you, but I'll explain it to you in a second. And we can probably transition into options. So this is what happens. A whole bunch of homework from my part. So you go through the week, go into the week ready with potential trade setups for myself. These are notes for myself. You have a video that goes along with that, 3 videos. I broke it up into 3 different videos because somebody asked. It's easier. Fine, extra work, that's okay. Tonight, I will send out, in about half an hour, the futures will open. I will take a peek and send out a note to prep us for tomorrow and the week. So you're going into the week with a whole bunch of homework that you may or may not have done. And I may have done it for you. And it's all stocks and not just US-based stocks. Okay, that is one part of the service. And then the write-ups. Every day, at least almost every day, I share a trade setup for somebody that cannot be in the room. A lot of people have jobs. A lot of people cannot dedicate time to sit in a room and watch for fast trades. Well, that's what I would like to do. And so I share trades that are supposed to be snoozers, that go weeks, kind of a set it and forget it type of a trade. If you're old enough, Ron Popeil style. And these days, it's hard to find these because of the VIX being so high. So I am a proponent of closing early. So if I sell a put spread and it does well, I would want to close it. Like I did a couple of trades in Shopify. That thing moves so fast. One day it's up, one day it's down. I'm confident that will work out in the end, but just to be safe, I trim some. I did same with SoFi, although I may have wanted to hang on to it. I hear that there's a headline after hours. We'll see if that plays out with the charts. But things like this, there are some stocks that are good for the long term, like Facebook. I bought the dip. I was very confident of it. It bounced, and then it fell with the market. I just repeated the trade, and then it bounced, and then it fell with the market, and I repeated the trade, and I'm still long Facebook and short Facebook. How is that? I'll explain. I'm long Facebook long term, and I shorted last week against my longs. So kind of like selling a covered call. So basically I get paid if Facebook didn't take out 225 or whatever the level was, 125 or 220, wherever it is. So the 25 number. So that died in my favor. So now my long position is cheaper for me, and I booked profits already along the way. All right, so this is complicated. It's starting to sound wonky, so let's jump into it if you want. Oh, I had another conversation about the SQQQ with someone today. So let's go into Apple to explain options altogether. Are we ready? Take a breather.
Let's do this. Hey, for all you number ones out there, make sure you're paying attention to this. This right here, this is where, if you can wrap your mind around this, it's going to be a game changer. So don't.
Whoa.
I'm serious.
Let me check my notes.
It was a game changer for me. It's not rocket science. It's a statistic, right? We're talking about what is an option chain, and I'm sure I don't want to steal your thunder, Nick, but just pay attention and take notes here.
Yep. So this is somebody's asking, Tony's asking, what do I mean by reading the options data? I'll explain. So first, whoa, sacrilege. I'm talking about options and I haven't said the one thing that everybody says. What do they say? Can anybody guess? What do you know about options? If you take an options class, what was said in the first conversation, the first paragraph? Leverage? Meh. Yeah, they do risk. Yeah, but what? Volume. You're touching on important points, but what do they say about options in general? That is correct, Dennis. That is factual. Trend. All great. I'm glad you got, but what do they say about options in general? One more try. In general, options, most options expire worthless. There we go. Now we know it. So that's what they say. Why on earth would I want to buy them? Right? Okay. So I invite you to shed this notion. How do they resolve when they tell you most options expire worthless? And then on TV, if you're watching CNBC, which you shouldn't watch, they tell you they are buying the blah, blah, blah. So everybody piles into the same one. They're all piling into with the most in one area. How do these two things resolve themselves? If they if they expire worthless, only the first few people that get in there are making money. And guess who they are? The people not chasing the message from the TV, but the people pumping the message on TV. So whether by design or not, you're at a severe disadvantage if you're buying unusual options activity because you saw it on CNBC or read it in print somewhere. If you're the person scanning for unusual options activity through your own software or paying for a service that does that, okay, legitimate way of making money. But if you're chasing because you heard somebody said it, you're already way too late. That's my opinion. Okay, let's put that aside. Most defined risk, yes. Most options expire worthless, so they say. I cannot verify that, nor do I give a crap about that. Let's say it's true. So I want to be focused on thinking about options from the market maker's perspective. So who is this market maker? It's not like there's a group that have a tag, we're market makers. Anybody willing to sell something is a market maker. If I have a bicycle and I want to sell it, I made a market for bicycles for that period of time. So that's my concept. I want to be a micro market maker of whatever I'm selling. If I find something safe, I want to make money off of it. So the concept is it's easier for me. It's harder for me to say, okay, Apple will be at that level by that time. It's much easier for me to say, Apple is not likely to be at this level or at that level at that time. I'll explain. First, let's define options. So if you don't know anything about options, I want you to forget the idea that you know anything. Like you probably have heard calls are bullish, puts are bearish. Forget that. That's incorrect. They're both. Depends on what you do with them. And most scenarios, options are always bullish, and I'll explain. So this is an options chain, and they are contracts. Everything options are contracts. So like every contract, it has stipulations, it has terms and conditions. So let's walk through the few that are important. The first one being time. Somebody mentioned in there, time. So these are all periods of time. You can see they extend to 2024 if I wanted to. Let's go with July. 40 days on the clock. So that's one term of the contract. Everything on this page has 40 days on the clock. If I had chosen August, everything on this page, 75 days on the clock. Let's go back to July. It's closer in time, more tangible. Okay. So that's one element, time. So what else? It's about Apple. Everything is about Apple. So Apple is the only variable here, the asset. Okay. Quantity. Everything here, everything, each one of these contracts is 100 shares. Everything is 100. So now we know time, we know the actual asset, the quote underlying, and time. Notice I'm not saying anything Greek yet, yeah, nor will I. So, the idea is time is very important, and it's 100 shares everything I do here. Okay, and how about price? Yep, this is price right there. Price levels. I can choose whatever price contract I want. So far, I haven't said what they are. Okay, so now let's just jump into that part. We have two flavors of options. We can get a put contract or we can get a call contract. So I will explain the put contract first because it's an easier concept. If I have 100 shares of Apple and I'm going on a vacation for the next 3 weeks and I'm really worried about whatever is going to happen in the market, I can insure my shares by buying one put because I have 100 shares. We already established that each contract is 100 shares, so I only need to buy one put. For example, if I want to protect myself at 130, I will buy this $130 put. I only need one. I'm a buyer of that put at 130. Why 130? Because I chose it. I could have gone lower, cheaper, higher, more expensive. 130, it's $2, but it's 100 shares. So that would be $200. If I click preview, it'll show debit $200. What happens? What does that mean, a debit? I have an insurance policy on 100 shares of Apple. The seller of that policy, the person that did this, collected my $200 and they're on the hook. They're obligated to do something. I'm not obligated. I own the right to sell my shares at 130. So this way, if Apple goes to zero, I call my broker, hey, I have an insurance policy, stick the other person with those shares. What happens? The broker takes that put option off your books, takes your stock off your books, gives you $130 per share. The other person's in 130 put that they sold goes off their books and they wake up owning 100 shares of Apple at 130 and Apple is zero. So they're on the hook from 130 on down. Clearly, Apple's not going to zero anytime soon, but you get the point. So they're on the hook from 130. So you're saying, let me tell you how this is not bearish in either scenarios. If I was worried and bearish Apple, I would sell my shares. I wouldn't spend $200 to keep a stock I'm bearish. So I would definitely sell my shares. The other person wants my shares. So they're not bearish either. They just want a buffer. And if I don't give them my shares, they make $200 in the process. So they make money out of thin air. So that's a pretty attractive deal. Win-win. They want shares. They have the opportunity to get paid. And if they get the shares, fine. If not, they made money. I want to keep my shares. I want some peace of mind. I paid a little bit of money. Everybody wins. The broker loves it. They're making money off of both of us. So win-win. That's the put side. Now, the only way the puts are bearish if I bought puts in Apple and I don't own shares. By the way, I don't need to own shares to do anything in options. I don't need it. So if I didn't have shares in Apple and I bought a put, that means I am bearish Apple. Why? There's no way I can make money unless Apple falls. And if it falls, I'll make a lot of money. Notice how much the premiums are higher, closer to current price. So the higher I buy the put, the more expensive it is. So if I buy it here and then price falls, this is going to balloon. That's the leverage effect that you get from options. So on a day when the stock is down 4%, those who bought puts the day before, they will be up like 30%. Those who bought calls, they would be down 30%. So you better know your stuff, right? That's why options can be more dangerous, but I'm going to prove to you that they are not more dangerous, and I'll use it in a little bit later. Remind me. Okay, so this is the put side. So what's a call? These are calls. Again, I do not need to have shares to buy calls. In fact, that's how I get to buy shares. Let's say I wanted to invest in 100 shares of Apple. So that's 100 shares times $150. That's a lot of money. And I'm nervous. So what do? I can lock my price by buying a call. So if I buy one call, again, I choose the price. I could choose it here, choose it here. We'll talk about that later. Let's just talk about almost at current price. I lock my price at 150. Let's say you think that Apple is going to 170 in 2 weeks for one reason or another. You buy this, you're in at 150. So if you're right, you're going to make money. If you're wrong, you didn't risk a lot of money. You only risked $450. So if price rises, this is going to get more expensive. Look how more expensive they are. So if price goes to here, this will probably be $1,300, I'm estimating. We don't know until that happens and how fast it happens. So then I don't even need to buy shares because I paid $450 and that asset that I bought and own, the position is in my account, turns into 1,000. So I more than doubled my money. I would sell the calls. I wouldn't even buy the shares. Just the calls I paid for were $450. Now they're 1,000. I can more than double the money without doing anything else. Out, buy. It all depends on what you want to do. So who's on the hook? Somebody that sells the call. Never sell a call that you don't own shares to. In other words, the person that sold the call on GME is bankrupt because they promised somebody that they would give them stock here, and then GME went like 400% or whatever they went. They have to deliver it at this price, even though the price is way higher. So they have to go out and buy it at that higher price to deliver the shares. And by the way, on the way up, your broker will liquidate your account to cover your position for you if you don't do it, which means you're bankrupt. Never sell a call naked. What does that mean? If you own 100 shares of Apple, you're okay to a degree. You can sell a call. You want to sell your shares, you sell a call. If they call your shares away, fine. If not, then you still have your shares and you made some money. That's called a covered call. Like you create your own dividends. I'll explain that in a little bit. All right. So we have an idea now. We have options or contracts, buyer and seller. For every buyer, there is a seller. So when you hear on TV, they're saying they are buying the 160 call. No, they're buying it and selling it. What they mean is the way the position happened, they favor the buyer. Meanwhile, who's to know that the buyer or the seller are smarter? They don't take them off the shelf. Somebody's taking the other side of that argument, right? So there's always a buyer, there's always a seller. So somebody asked me, how do I read the options data? This stuff right there. That's gold. Gold. Every day, we get one number for open interest. We have one here and one here. Can you see that? Let's make them bigger. Open interest means what positions were there from the day when it started. That number is static. The open interest is static, doesn't change. It's based on what happened the day before. Now, Monday, tomorrow, when the market opens, this number will change based on what happened on Friday. That's what happened on Friday, volume. And this number will go back to zero. Monday morning is zero. It starts ticking, buy, sell, buy, sell, buy, sell, buy, sell. This number doesn't change. Tuesday morning, this number will change based on what happened here, and this clicks back to zero. Get it? Same thing here. So volume is what's going on right now. Open interest is what we woke up with, and that doesn't change until the next day. It's updated once daily. So that's an important thing. Now, what is the most important thing on this page? What column is the most important column to me, if you know me? The important thing is this guy, who I don't want to, yes, Carlos, I don't want to say it because I said I'm not going to say anything Greek. That's the only Greek word I'm going to say. Delta. Okay, so the delta has a fancy definition, something along the lines of the amount of with which the price of that contract changes with a dollar change in the stock price. So if the stock price goes up $1, what happens to the call there? That kind of a thing. You go try and put that to work. I'm going to give you the easy, stupid way of doing it. I should have one next to me here. Oh, there we go. Big fat coin, whatever that coin is. Shazam. That's a big coin. So it's the odds. So if you flip a coin, you've got 50% of chance of winning, right? So if you buy shares, you theoretically have 50% of winning or losing because you don't have a mathematical edge over your competition. You're buying shares at current price, period, end of story. You may do homework and give yourself the advantage in your head, but it's not a mathematical advantage. So everything like 145, the delta is about 0.5. It's about 0.5, which is what? It's a coin flip, 50%, 0.5. 1 is 100%. 0.5 is 50%. That's a mathematical certainty. So let's walk through that logic. How can we put that to work? So if you or your friend says to you, I'm buying Apple, you say, why? I think it's going to be 180 in August. Let's go see if the market makers approve. You go to August, 180, you go across, you look at the delta, it's like 0.08. 0.08. Okay, so the delta here is 0.5. We already established that. Current price, 0.5. The higher you go, the lower that number goes. That's your odds. They're just falling. So according to the market makers, based on today's data, that's a small number, right? 0.08. It's not even 0.1. It's 0.08. There's under a 10% chance that could be a price, where price is going to be in 75 days. So what this says, there's very little chance, that's a small number, there's very little chance Apple will be at 180 in 75 days. That's what that means. There's very little chance Apple will be at 180 in 75 days. So you would tell your friend, you might want to adjust your expectations. It could rally, but I don't think it's going to get to 180. So if that's a mathematical representation of the odds. So let's take the opposite side of that story. You can also tell your friend, there is very little chance that Apple will be at 105 or 100 in 75 days. You see how I said it's easier for me to say where stock is not going to go, as opposed to trying to pinpoint where it is going to go. So if I know these two facts, I can sell options here and sell options here and sit back and relax. If that doesn't happen, where price goes down to here or price goes up to here, I make money out of thin air. That's what I do. Credit spreads, you don't need a big account for that. $400 per contract would do you right if you use iron condors, for example, of risk. So a small $5,000 account, $2,000 account, doable, although very restrictive, can be doing these with a small, a bigger account, much easier, but a smaller account can also participate. So it's easier to say, I don't think Apple is going here. I don't think Apple is going here. Let's just make money from that. So then you sell risk outside those edges. Now, this is not a trade alert for you to go sell options in August because it includes an earnings report. But you can say the same thing here, except the range will be tighter. For example, look, 0.04 is now 110, not 100, because there's 30 days fewer than the contract in August. All I did was switch from August. 0.04 is 100. See that? August? Why? Because there's an extra 30 days. If I go to July, the 0.04 is at 110. There's less time on the clock. Okay. So this is information. So if you don't use options, use the information. If you think Apple is going somewhere, go verify that fact. See if the market makers agree with you. They're the ones selling all this stuff. The reason why there is an 11,000 contracts here, because there's somebody with big pockets that said, I'll take that bet. You're going to lose. That's what they said. So they sold it. And chances are they made money already because there's only 8 cents now. These have been there. These are new or new transactions. But here, only 200 contracts exchange hands on Friday. Probably somebody booking their loss. So more likely than not. So you see how the information, it's a gold mine of information. And on expiration day, it's super important because I use it to guess where prices are going to go. And it's too complicated to explain here. But if you're in the room, I'll give you the benefit of all the analysis on the fly. and I keep updating it. And I had a box and I'm moving the box. This is the range of close. This is the range of close. And boom, nailed it. I did call the close, but I was a little bit off. The last 2 days, I was 7 cents off and 12 cents off the 2 days prior to Friday. So the information is not junk. It's real information. It's not foolproof, but it's better than much better than nothing. All right, so I'm going to prove to you how options are safer than stocks if you use them properly. You guys have heard of a company, small company called Tesla? Anybody heard of it? Yeah. So I'm going to use it for a ridiculous statement. Who likes Tesla in here? I'm assuming a whole bunch. Okay. Do they bake bread? If the car catches fire, they do. Yeah, you can bake bread. So would you bake croissant? Would you get paid? Would you take? Listen. Would you take $1,800 today if you promised to buy 100 shares at $350 a share? Okay, let's be clear. This is Tesla. Tesla is 700. I'm asking you if you take 1,800, whatever number I rambled off, if to buy shares down here. Would anybody do that? Because that's what they will pay you today. If you have the money to buy 100 shares of Tesla, somebody will pay you almost $1,800 today. So let's say you want to buy 100 shares. I say, I like Tesla. I want to buy 100 shares. You go out and buy 100 shares at $700. Instead, I go out and I sell one put. Now, this is not an alert to go out and sell one put for November, okay? You spend 100 times 700 out of pocket. You're done, right? That money is out of your pocket. Your money is at risk immediately. The stock falls, you're losing right away. And that is a big pile of money. I, on the other hand, collected almost let's round it, $1,700 to take the same risk, a similar risk. No money left my account. Money came into my account. Now I am on the hook to buy 100 shares at $350 if called upon. If they don't give them to me, I made $1,700 out of thin air. That's the only thing I can make. Meanwhile, let's walk through the disaster scenario. The stock falls to $350, all the way to $350. You lost half your money almost, right? And you already lost it. That's on the books. Now, I haven't even started losing, because my worst case scenario would be to wake up owning shares at $350. And if price is at $350, I still made $17, which is $1,700. If price falls more than $17 below $350, I start to lose money. So my break-even point is $333. Did I do the math right? Yeah, something like that. So it is, I have a $17 buffer from $350. After that, if I hang on to the stock, I start losing money with you. Meanwhile, you already lost half your money. So tell me how this is more risky than shares. And then I know it. Somebody say, you're going to tie up margin. Buddy, you're going to tie up much less margin than actually buying the shares. So it is not riskier. It's a matter of math. Anybody that tells you it's riskier doesn't know how to do math. You can get riskier than stocks because you can use them irresponsibly and they can lose you money pretty quickly. If you start buying this and that and this and that, suddenly you look at your account, it's like, wait, what just happened? Where's my money? Because you bought this and you bought that and you bought this and you bought that and you didn't close anything, and most options expire worthless and your money's gone. So that's why it's easier to sell than to buy. So what if somebody doesn't have a big enough account to do that? They can do a credit put spread, which is a way to limit the risk. $20, I don't like those things. $10. So you can get, this looks like 14% yield on risk, if I'm right, 18% on risk. And I risk $900, $850 to open this trade if they fill it at that price. So there is a way to limit the risk so you're not on the hook from 380 all the way to zero. So Right. That's why I'm not condoning buying options left and right. You heard that part, right? So every investment is risky. And the fact that I just showed you a scenario with one of the best companies out there that you can lose half your money. And if you did the same trade using options or a similar trade using options, you didn't lose anything. And I used an extreme position to illustrate the point in an extreme way. Options are leveraged and they give you fast wins and fast losses. If you start buying with that purpose, you lose a lot of money. And if you buy with purpose, for example, let's say I am bullish, whatever this company is, I sell a put spread and I buy a call spread. I'm long for very little money out of pocket. So I can't lose more than the money I risk. So it's a very finite, controlled environment. I go to bed knowing exactly how much I'm going to lose. If I own a portfolio of 100 grand, right? And the stock market crashes. And I know you guys don't remember crashes, but crashes are pretty tough. You lose half your money. You lost $50,000. Whereas with options, I can take risk. And I know that if the stock market goes to zero, I can only lose this much. And I'm comfortable with that. It depends on how you deploy them. That's it. Buying calls is like my least favorite thing to do right now, unless I'm buying them from here to here during market hours. Because the VIX, which is the CBOE volatility, the fear index that you see, the VIX, is too high. So everything you buy right now is too expensive, which brings me to another column you guys need to investigate, which is this one here, implied volatility. Now, we made a bunch of money on it recently during the earnings. Who's reporting earnings tomorrow? Somebody reporting before the open tomorrow. Can anybody remember? Like a high profile company. Anyway, when a company is reporting, this number is very elevated. Merck, yeah, but that's a boring company. So I want something more exciting. Thanks for answering, though. Anyway, so let's say, I think it was at the time a firm, for example, or anyway, one of those high profile, high moving company. When they're reporting earnings, that implies Futu. Yes, Daniel. Let's check. And that's not a very liquid stock. Somebody asked me about it today and we had a debate. I was like, why are you bothering with Futu? Okay, so anyway, so you see the options. Come on, show me. No, that's not a good example. So the options are usually priced to a certain level of nervousness. Like the options in Apple, they're relatively stable. They're usually the implied volatility, I'm going to say 35, right? Tesla would be usually higher than that. So there's no event in Tesla and it's 150, 130, just because Elon is slapping his lips these days. So the elevated concern is it reflects itself in the implied volatility. What do people expect? Now, if somebody is reporting earnings, that number would be huge. And you see people, oh, I bought the put and I bought the call trying to bet on the price action. Well, if you did that, you overpaid. Usually the options, okay, 70, there we go. Usually the options are like maybe twice more expensive than they should be, just for the privilege of living through an earnings event. So as soon as the event goes off, you're going to lose like 40% of your money, both calls and puts. So I did videos to our group before the earnings on Roku, before the earnings on Zillow, and I want to say Affirm and another one, I can't remember. And they all doubled in the trades I suggested. I said, if you guess up, I think you should do a diagonal, which is a strategy where I buy something, but out in time, not current week. I buy it like 2 weeks out, where the implied volatility is lower just because there's no event. Whereas the week where the event is, everything is so expensive. So I sell that because I own something out in time. I'm not creating extra risk. And those trades doubled. I remember it was 60 cents to open the Roku trade, maybe 65. It was like $1.25 the next day, maybe $1.30. Same with Zillow. It was a bearish bet on Zillow. And the last one was also an upside. Maybe Zoom, I can't remember. So if you, and the call I bought didn't make money. It lost money. But the call I sold lost twice as fast. and I had sold it. So the net effect, the out-of-pocket expense, the 67 expense turned into a win. So it is important to know what you're buying and what you're selling. So my default is, let me sell something. That's my default. What can I sell? What can I sell? Like here, this is Tesla. Check this out. 33,000 contracts on Friday. 33,000. If most options expire worthless, does that say price is going to be below or above on next Friday if nothing changes? If for this to die worthless, price is going to have to be above. If they're correct at saying that most options expire worthless, you can use 700 as support for the week until that number changes. So like right now, I'm comfortable saying that Tesla should have a decent week based on this. Now, I haven't looked further down to see the rest, but just to see that 33,000 contracts plop in here on Friday, those are people panicking, protecting their assets. Well, market makers don't have a habit of rewarding people that do that. So we'll see what happens. I mean, clearly that's just one day, and there are still 5 days to go in the week, but that is a comforting figure to see. And just, I didn't check that before. So if I zoom out a little bit, let me see here if I can zoom out and expand to see if I can pick up another big order. There's no big order on calls until here, which is, so 700 to 750. If this was expiration day, I would say there's upside pressure towards 750 and resistance starting at 750, just from reading the options. I haven't looked at the chart. Let's go see if we can match it up on the chart. Yeah, nothing too flagrant to that. It needs to hold 700, otherwise it falls to 680, but it has a ton of support down there. So we'll see what happens. And there is resistance at 740 or higher. So that I agree from the options. So we'll see how the options picture progresses. So far we talked to all the newbies in options. Hopefully by now you have an idea of what options are. Contracts, they come in two flavors. One does this, one does that. And now we're starting to talk about strategies for those who know options. And my favorite ones are whenever I can sell an iron condor, so I can beat the crap out of the exuberant people that are super bullish and then hand a loss to the super bearish. I would love to sell a losing lottery ticket for those who are super bearish that put spreads way out of current spread, and the super bullish people who are expecting miracles and they shouldn't come, and just let time do the rest. There is a way where I have a few people in my group that do nothing but that all year, and they've been in my group for 9 years. The iron condor, okay, yes, sure. So let's put a visual to it. What is this, Tesla still? All right, we'll do Tesla. I'm going to show you the visual, but that by no means is an actual trade alert, okay? Because it probably won't be, it's not enough for me. Okay, so let's see here. Man, all right, so I'm going real low. I'm trying to find one that fits my parameters, okay? Okay, I'm going to stop here. I can go lower. So if I sell this spread, what is a spread? It's a position that has two pieces of things on there. One, I sell a put that opens risk. But second part is I buy the put below it. That limits my risk. So now I'm on the hook to buy somebody's shares. I'm off the hook. Somebody will buy my shares. So now I go to bed knowing I risked $100 for doing this. What do I need to win? I don't need a rally. The rally comes, I win. The rally doesn't come, I win. It falls, I win. If it crashes through 555, I lose or may lose. That's the only scenario where I'd lose. What do I need to win? Nothing. I need time to go by. How much time? This is through July. What is my payout? It's 27%. So let me rephrase that. If I do 10 of these, I collect $1,000. I'm risking 4. You're saying, whoa, what the fudge? Well, let me rephrase it. What stock do you have that you can buy for $4,000 that delivers 27% rally in with an almost 88%, 85% certainty. I guarantee you don't have one where it's scheduled on an 85% certainty, it's going to rally 27%. Well, this delivers 27% and the stock can fall and you can still make it. To make matters better, that is a bull put spread, credit put spread. Okay, that's one scenario. Now, if I did that scenario and then I did another scenario, higher, it's going to look like this, but I'll show you much higher than this. I can double my take and cut my risk in half. What? Yes. What is now 700? So probably we're going to have to go to like 850. Let's go to 875. I'll show you. 870. What do we have? 870, 75. Okay, that's close enough for government work. So if we go to 870, 850, there's the other order. Now this order is still way down there at 560, 555. This order would be the opposite of the other one. I sell a call, so I'm shorting a stock outright, of which I don't own stock, but no fear, because I'm buying it right above that. So I'm limiting my maximum loss. Now this is also $5 wide. Look, $5 wide, $5 wide, puts and calls. So this altogether is an iron condor. This is a little bit aggressive, so that pays too much, but it reflects the situation. So if this stock stays between this red one and the lower red one, which is 560, I win. How much? That is a crap ton of premium. So the payout, this payout is too much for my taste. I would be more humble. So this pays 54%. Have you ever met an easy 54% trade? I don't think so. So I would collect less. I would risk more money at a safer distance. But that's the concept of an iron condor. A huge range. So I want 870 and 560. Let's put it on the chart. Whoops, that's not what I meant to do. Close that and go back to the chart. So we are on Tesla. We are. Let's see. Let's go to the weekly. Now a whole bunch of stuff are going to show up on the chart, so ignore that. It goes right in the middle. So coordinates, what was it, 860 and 760 and 850? I think that's what it was. Anyway, so I need Tesla to stay inside this range. Did I do this right?
Was it 570?
570, thank you. I was like, that doesn't look right. I'm old. Where is my, you get the point. I need it to be a very, very wide range. Here, let's do it by hand. 850 and 570, I think. So as long as Tesla stays inside this box right there, they can do whatever they want in here. As long as they stay inside this range at expiration, I collect 54% on my risk. So you can ignore the rallies, the drops, the rallies, the drops, let them fight it out. All I need it to be is stay away from this side, stay away from that side, but I'm selling one thing, I'm buying one thing. I'm selling one thing, I'm buying one thing. That's an iron condor. Let's say price does that. My maximum loss is $5, but I collected $1.75. Let's say price does that. My maximum loss is $5, but I collected $1.75. So I can't lose on both ends. Price is not going to kill me here and here. So my maximum loss is $5. Whether it goes to the moon or goes to zero, it's $5 minus what I collected, which is $1.75. I usually like to collect $1. 25% yield on my risk is plenty exciting for me. Other people like to collect $2, and that makes it more of a, you have to sweat it, but you get paid for it. So you can choose the risk level that suits your tolerance. But not everybody's the same. I fight for a sport. I literally fight for a sport, and I'm chicken when it comes to money. So I would rather be conservative and only take $1, $1.10, $1.20 max. Other people collect up to $2, and statistically, they have a smaller chance of success than me. My setups will have 85 to 88% chance of success. Their setup will be closer to 70, which is still okay. It's not super, it's 70. Whoa, high. No, it's not high. Remember, 50 is this guy. It's Vegas. 50% chance of success is a coin flip. That's gambling. So 70 is not that much better than gambling. 85, that's what I want. If you remember the bell curve, with the standard deviations, everything happens plus or minus 1. And if you go to 2 sigmas, 2 standard deviations out and 3 standard, I want to be here. Like if I can get to the 3 where nothing happens, like I want to be the guy selling insurance to the person who drives in the desert that doesn't have any neighbors for 50 miles. So he's not going to get into a car wreck. So that's the kind of trades I like. All right. So this is a quick rundown of an iron condor. But in the process, we learned about a credit call spread, bearish call spread. This is a bearish position, but does not require a rally to win. That's how I shorted oil. I'm picking a fight with the world on oil, and we'll see who wins. And the credit put spread, which is the other side of the equation, which we saw, I think 570, those two things. The credit put spread, also called bull put spread, that's a bullish position, but does not need a rally to win. So I don't need a rally. I don't need a drop. I just need it to stay inside this wide range. And I can pick that to be 1 week, 10 days, 2 weeks, a month, 6 months, a year, 2 years, up to my preference. So I do these with the indices all the time. At any point in time, I have a bearish position in the indices. At any point in time, I have one of these in the SPX, in the IWM, RUT, something like that. It balances out everything I have. So if I'm long stock A, B, C, and D, I throw one credit call spread of these, it gives me balance. It's not protection, it's just balance. On a bad day, the balance works for me. On a good day, the balance works against. I have all the stocks to help me out. All right, so we have Boris asking, why not straddles? Buy or sell straddles?
Can I pop in here really quick?
Yeah, go ahead. That's your show.
So we've got some more content for you here. But for any of you that are new to Benzinga, I want to let you know that we have 50% off of Nic's program for you today. Plus, if you purchase today, we'll give you a free laptop. So I'm throwing the link into the chat rooms for both of the chat rooms here. Keep in mind that's giving you 1 to 2 swing trades per day on average with a write-up from Nic. So even if you work a full-time job, you can make money while you're learning. Even if you're on a paper trading account for some of this stuff, you can learn a permanent skill set for much less than a college course, and we'll give you a free laptop. Then if you want to day trade, maybe you have some days off during the week, you want to learn how to do that, you can go into Nic's trading room, a live video trading room where he's calling out day trades throughout the week. You can see his screen on your computer. And then, of course, one of my favorite parts is all the homework on the weekends, where just like this morning, he covered 144 companies. You have that spreadsheet, so it's easy to filter through. You can very quickly tell where Nic is identifying a potential trading opportunity and how he might recommend structuring that trade. So, I mean, it's crazy how much value you get out of this setup for less than $1,700 a year. I mean, that's laughable. That's like what I spent on like books for 1 semester of college. So yeah, be sure to use that link if you're not already a part of the room. I'm throwing that into the chats right now, and I'll throw my contact info in case you have any other questions. You can reach me directly, jonathan@benzinga.com, or call my phone number that I'll put there as well. So yeah, let me know if you have any questions, but you get swing trade picks, day trade call outs, viewing Nic's charts live while he's trading, getting picks from other members, as well as a 2 to 2.5 hour charting session every single weekend. So yeah, that's my blurb. And there's only 10 of those laptops available. We'll still give you the 50% off, But yeah, don't wait on that because there's only 10 of those laptops available for today. All right, yeah, and Khalid, for anyone who has any of the other Benzinga programs, maybe you're a part of some other inner circle program or have a newsletter from us, just shoot me an email and I'll set up a custom discount for you so that it all makes sense. I'll create a custom package or whatever. So Jonathan@benzinga.com. All right, I'll shut up now, Nick. Do your thing.
Somebody's asking if it's an Alienware laptop. I doubt it, but you can go ahead and wish for one.
They're not top of the line. They're not top of the line laptops. They're whatever we can get.
If you don't need a laptop, donate it.
Exactly.
Give it to somebody who can go to school with it.
Exactly.
Okay, so this is Friday. By the way, we track when we're in battle mode, like Friday. We go down to the 15-second chart. So this is a 30-second chart. If I go to a 15-second chart, you'll see. So you'll see how I guided the group to succeed with those puts. Like those comments of like, I made this much on the puts. Wow, for frick's sake. I mean, how many times am I going to grab my own comments trying to move the stock? So I laid out the action. I draw these lines ahead of time. And I say, buy the rip or buy the dip, right? So in this case, they ripped and exit. We're about to exit. And then the puts brought us this. And then late in the day is where the secret sauce comes in. I drew this box, Nic's Max Pain. So if you assume you've heard the Max Pain theory, I'm a little shaky as to how they do it, but the theory behind it is bulletproof, but you need your own brains to do it. Because if you use the Max Pain number, in my experience, it's based on the open interest, which is garbage as soon as the market opens. So then you have to get your own Max Pain number live into the close. And this was my box. And I kept moving it from here to here. And it started with, it was much higher and then it dropped and it dropped. And then at the close, I said, this is the range where the SPY is going to close, guaranteed. And then it did this. And I said, buy the dip because it's going to come back to 410. I said, if there's a rally, sell it. And if there's a drop, buy it. And the drop happened. And then they came back to close inside the box. I was confident of that. And I kept track of it. I thought it would close here, but I was off. The other 2 days before that, I was within 7 cents and 19 cents or 15 cents, whatever it was. So a lot of the times I get the pin right, but in this case, it didn't matter. The point is the money was made on the dip to buy the dip, and it played out. So last minute, those are big wins if you're active. So if you're one of those experienced options traders or futures traders or just equity traders that can get in and out, the opportunities throughout the day is pretty good. We use harmonics. You can see the harmonics coming out here. I'm not an expert on harmonics, but I'm bulletproof on how to use them. That's why I have the service that draws them for me on the fly. And we have a couple of people that are harmonics experts in the room. And when we all come together to the same, like if I say, watch out for this level, and then Cypher comes in and says, oh yeah, I look at this level too from a different perspective, that level is bulletproof. Two good people with charts told you that it's there. So you better pay attention to it. Simple in and out day trade, calls, puts and out. Yeah, well, that's what happens. Simple in and out day trades. I mean, how much more simple can I tell you? Buy here, sell here, buy here, sell here, buy the dip. However you buy the dip, sell the rip. Don't fall for this. Like I would say, don't buy puts here. Don't buy puts here. So those who buy puts here are going to lose. If you buy calls here and put a stop right away, you have the opportunity to make this bounce. Sometimes we don't have information. We just shoot the breeze until we get something going on. Other times we play it like a top. I mean, it like sharp, spot on, I should say, like a top, the saying. And occasionally we get a couple of jokes in there. So in case you don't know who that is, look it up. Cornholio. So we do all these notes is because they're based on very low time frames for the action-packed people. But I don't like to trade that fast. I miss out on most of these because I'm organizing the action. I'm a more like, okay, give me a set of circumstances and I'll take a nice setup for weeks. So, but I'm pretty good at keeping the levels for somebody who wants in and out scenarios. And a lot of times people will jump in and say, I just bought calls on whatever, and I just bought puts on whatever. And there are a couple of guys where as soon as they say that, everybody joins because they post winners all the time. So I'm pretty sure they're better traders than me on the fast. So they come in and they contribute. And every once in a while, I take an issue with whatever they're proposing. And I say, keep in mind, if you're wrong here, this can happen. So to kind of like bring the level of enthusiasm a little bit down. Make back my initial investment. Carlos, if you don't come out a better trader, forget the trades. If you don't come out a better trader, I would be shocked. Forget the actual trade alerts. I'm not here selling trade alerts. That's not my benefit. I share my trade setups, but the benefit of the group is that I guarantee it, that you will become a better trader coming out. I don't care what kind of trader you are now, you will be better coming out because you have 300 other traders in there teaching you one thing or another. You learning, you teaching. I picked up 3 tools this year because of the people in my group. Somebody said, hey, look up Tradie Ticks. I looked it up and was like, holy crap, that thing is money. So I signed up, and I signed up 150 people in the process too. And that's a tool I would pay for. The harmonics tool I would pay for. I'm not a guy that pays for a lot of tools unless I need it, unless it provides me with something. And those 2 things provided me something new because of people like you popping in saying, have you tried this? Have you tried that? So somebody said, have you tried this? I tried it. I was like, I don't like it. So I don't need it. Look at here. I have a whole bunch of lines, but no tools. Everything is hand drawn. If I take those, I have the harmonics tools because there's no way I can learn it, nor can I draw it on the fly. And I have volume here, the volume profile, and that's it. And whenever I need to verify my harmonics, I resort to the internals, and I'm constantly going through these to throw them out. This is the only one I'm using right now. But these are new that popped up on my screen, on my radar. So this one actually is from one of the Benzinga guys, Neil, came up and says, hey, have you tried the Fisher transform? I was like, no. So I have it on here. I don't think I'm going to keep it. It's not for me. It looks like a MACD, and I can never make MACD work for me. It's not that it's not good. It's not good for me.
Quick shout out. Welcome to Don for joining the program for the year. Big Al, you're locked in for the free laptop, and Steven. So welcome to the 3 of you. We'll see you in the chat room. Shoot me an email if you have any questions, or I'll go after Nick is off of here. I'll go over where to find everything on the platform. So that's 3 of those laptops are gone. So we got 7 left for tonight. So awesome. Glad to have you guys on board.
Yep. So the benefit is you get to not trade alone. Never trade alone again. Find a group that suits you. Like I saw somebody say they were part of Mark's group. I did finally meet Mark, by the way. I met a few of the people that are in my group live. That was pretty cool at FinTwit in Vegas. I've never done an in-person event. Felt like a rock star. Felt a little bit embarrassed, but it was a great event to get to meet some of the other people. So I've been working with Benzinga for like 11, 12 years. I can't remember when. And never met the people in person. We've been like every day talking back and forth. That's the first time we meet in person. That was pretty good. So I'm guaranteeing you will be a better trader, better version of yourself out of my group. And if you don't see the value within the first allotment period of time, Benzinga guarantees you your money back. So there isn't a risk. So if you go in and you say, where are the trade alerts? Is that your first question? I'd be disappointed because first of all, patience. This is not a trade alert service. I share my trade setups. You will get my trade alerts, but that's not the point. The point is for you to find out what fishing pole works for you and how to make it work going forward and how you can contribute to the group so we can all be better at what we're doing. I'm telling you, it's hard to describe. There's a good sense of camaraderie. We don't have jerks. We mentioned Doc. I did have an argument with him, I think, right from the get-go, but we became friends after that. And it was just a miscommunication. And so they're no jerks. We're all after the same thing. We want no noise, some fun, and a whole bunch of opportunity, and get better at what we're doing. So it's as simple as that. It's as simple as that. So it's, somebody said the other day, why isn't it free to try out? Because I'll tell you why. I used to have a couple other businesses that involved signing up people's information. And so when you get somebody who actually actively pays something for a service to try out, even though it's guaranteed to give you back, they become engaged. When you take out your credit card and you use it somewhere, I'll give you an example. I signed up, I keep using the same example because there was a good service out there. I signed up for it. It's a famous one. I think it's called Symbolic. It looked intriguing. I signed up. I think they gave me 2 weeks. I logged in the first day I signed up. Okay, it logs in. Like, ooh, that looks interesting. But it cost me nothing. And I never signed up again. I never signed in again. And the time ran out. But if I had paid $1,000 or even $5, I would have logged in again and again and gave it a shot. As it is right now, I missed out on it. I'll try it again later when I have more time. Right now, I'm too busy to learn a new tool. So it's just a matter of commitment, mental commitment. And the fact that Benzinga is a reputable company, so they're not like taking your money and run. So you know that you're going to get your money, no questions asked. So I'm comfortable with that. They're comfortable with the content. So it's a symbiotic relationship. It's a fun time. It's a lot of work. Speaking of work, I need to get to work. So what do you need from me in order? Do you want to, let's do some tickers. We didn't do tickers. How about we take a few tickers?
All right.
NVIDIA.
I think, let's see, earlier, let's say I'm scrolling back to the beginning here. Someone was looking at AMD. You already talked about Amazon.
But I can answer AMD and NVIDIA without a chart. NVIDIA, please. Khalid, it sounds like you have a trade on NVIDIA. I'll make it very simple. I'm going to scare the... Okay, so don't add to your problem, okay? And don't forget to call it quits whenever you need to. All right, so the easy story on NVIDIA. NVIDIA is in a bind right now. First of all, the company is fantastic, okay? This is chart comment. It's in a head and shoulders that's targeting like 100, okay, maybe 90, maybe 110. But that doesn't mean it needs to go there. That means that the bulls need to recover the neckline so they don't go there, okay? So let me show you. AMD is the same boat. Bitcoin is the same boat. They are all in the same boat. The problem is what happened to the indices once we lost the February 24th Ukraine flash crash. That low on the 24th of February. Once we lost that, we basically lost footing. And now the bears are in charge. So every rally will be sold until that changes. So 240, trying to see what time frame would show it. So try to ignore as many lines as you can and focus on the ones I'm going to point out. This red line right there, and this March 8th, February 24th low, March 8th. Once you lost that, you're going down as much as the head. That's a lot. I don't usually give it full credit. So the bulls can still take it out, can recover it. And let me take out the lines and let's speak to it. You can see it almost like right there. They needed to hold and they didn't. As long as the bulls are below that, the bears are in charge. Rallies are opportunities to get out. So if I was an investor in NVIDIA and this happens and this gets me back to even, I will get out. Not because I don't think it cannot rally. That's a gift. The bears are in charge until the bulls get up to here. Now, AMD poked its head above 104, which is the number that I thought it needed to recover. Same boat, AMD. Head and shoulders. They're trying to recover the neckline. I'm still not convinced. So both, if now I'm even with AMD and I didn't get out. So here's another acronym you need to know. During the VIX being this high, the ABCs of trading in high VIX. Okay, so these are important things to do. Oops, that's too big. So on rallies, I should add insurance if I need it. Let's say Friday, I was saying, oh my God, I wish I had insurance. And then Monday, you get a pop and you don't do anything about it. Okay. You need to add insurance if you need it. Or on Friday, you're going, you bought the dip, and then Monday you get a pop. You should book profits faster than you normally would. And on Friday, you were crying about an NVIDIA position and then Monday you get a pop and you don't do anything with those trades that just got better. If the trades fix themselves with one pop, I would get out and reassess. So that you can see it. The bears are in charge until the bulls take back the reins. Right now, the bears are in charge. So Chewy is a good long-term hold, right? Because the business is growing. If you look at the P&L, yes, I do P&Ls too. What? You're not all about charts? Hell no. But I don't do anything without charts. So look, financials. The P&L, the revenue is growing fast, and it's not bleeding too much. And if I go on the overview, they generate positive cash flow from their operations. So they're spending a lot, but they're spending their own money. Compare it to Carvana. Carvana's sales growth is unbelievable. But last year, they logged a minus 2.8 billion in cash flow from their operations. That means, I'm guessing, they're borrowing the crap out of things. And if the rates are going up because the Fed is going to make it so it's impossible to borrow, will they be able to maintain their strategy of growth, aggressive growth? So I would not touch Carvana with a 10-foot pole versus Chewy. Chewy is stuck in a small crap vortex. You heard that right. Small crap vortex. It's not a crap company. It's stuck in a small crap anything that looks like ARK Invest would take, Wall Street is selling it like crazy. Palantir is in there, stuck. PayPal is in there, stuck. Square, to a degree, is in there, stuck. They're not crap stocks. They're great stocks. SoFi is in there, stuck. Affirm is in there, stuck. Those are good, legitimate businesses, but they're stuck in this vortex of we cannot find a bottom. So Chewy may be showing opportunity. So step one, stop making new lows. Step two, look, I said doable, and it's almost there. Step two, you want to build an ascending pattern. How does that happen? Buy the dips already, for frick's sake. Buy the dip. So far, they've been selling every rip there is. Every rally sold. Start buying dips. They just bought one. Bought the dip. If we dip this week and we bounce off and we take this high, we would be buying dips. So Chewy, you've got my permission to invest, not all in. This is a big rally on earnings. So give it a chance to prove itself. What else? All right, we talked about that. Give me another ticker if you want. It means sentiment neutral, sweet bearish. Where do you see that?
Someone said CRSP earlier.
CHPT. Charge point. Okay, so my guess on charge point for the earnings was spot on. Let's see here. I'm not a fan of companies that are all about the future and no current. So I need to understand the P&L better. So I will restrict my comments to actual chart. Back holding. Okay, so rally, sold, rally, sold, rally, sold, rally, sold, rally. So onus is on the bulls. They're trying to take back control. This is a daily chart, so it's a big picture thing. Whoops. If I go to 2-hour chart, they're fighting for control. There's a high, there's a low. They're trying to get to the middle. Going into 16, it's not an obvious entry point because that is where they started to fail before. Now, if they clear 20 or 21, they might have some breathing room. So cautious optimism, okay. You want to see what happens if they dip towards 13. You don't want them to come down all the way to 1230. Although it is okay under normal circumstances, these are not normal circumstances. So what you want ideally is for them to keep a tight channel going. You don't want them to drop more than this. So ideally you want them to do something like this. Let's say they hiccup here this week and then take that out. Now you can dip again. And now you just bought 2 dips, 1 dip, 2 dips. 3 dips. And now suddenly the machines will flip code. Hey, we're no longer selling rips, we're buying dips. Did you hear? And then you tackle one line at a time. So yeah, it's not my favorite, but it is tradable. Now, somebody said, I think I understand what you're saying. What's a sweep? Okay, so these are terms: unusual options activity. You should know them: a block trade, a sweep, a split. They denote someone's interpretation of something. So, for example, if a big order comes through, a block trade in options, that's confidence. Somebody, I'm taking this giant order right here, and I don't give a crap who sees it. That's confidence. Whereas a split, somebody saying, okay, I want to hide my order, let's just split it across and try to get it through. A sweep, I believe, is not only a split this way, but a split that way across different processing venues. So they take it into different markets. So trying to hide a big trade. So some people chase those and they become self-fulfilling prophecies. And there is software out there you can pay for. I believe Benzinga's Pro offers you a unusual options activity, and it's probably one of those things you can change in there.
Correct. That's
I'll
show you guys that
on TradyTix. I use one page in TradyTix and I use it religiously, and it kicks ass. And I'm rarely wrong at it. You join the group and I'll share my findings every day on every earnings report. I haven't had a whiff on earnings in a while, and that's saying something, because I'm the one that preaches coin flip, coin flip, coin flip, coin flip. I'm growing more confident in the data I'm getting. So I'm interpreting more winners than ever as far as direction. How you trade it is on you, but it's still a risky proposition. But TradyTix does a lot. I'm just stuck in one page. I haven't needed to go to other pages. What else is going on here? You just joined. Carlos, welcome. Just pop in and say hello. And Carlos, first thing in the morning, log in before the market opens, and you'll see the morning sheet. In it, there's a link to the live chat. If you can join us in the live room, that would be great. What about you, Vinny? You too. I don't know if I don't see the back end, so that's up to them. DocU. That's the company they told you they were going to suck, right? And then it fell apart right here. Yeah. Okay. So I'm going to give you a hint, a little easy hint. When the action is like this, when there's a moving average and the price cannot cross that moving average, you can safely assume that the bears are in charge. So if you buy calls when the price approaches the moving average, you're making a mistake. So this is not an easy entry point on the daily chart. So if you go granular, you can see that 88 might be a catalyst, but you immediately face resistance at 96 and up. So yes, good progress on the 2-hour chart, probably even better on the 1-hour chart. Other than that, let me see, 30-minute chart. Yeah. So on the 30-minute chart, they're already buying dips. So the bulls are already in charge. Now, your first challenge, 88.4, 88.6, that one. You take that one out, you can burst to here. That's $10, but that's a big if, right? So first, hold 80. So if I were to, I would do this, and I would say something like this, range. Nope. Basically, trade the range until the sides are breached, and then you chase in that direction. CRM, please. Well, CRM, there's no need to beg. CRM is out of the, it did not deserve to be as low as it was. Just don't chase it. XOM, I'm short. XLE, I would short. Roku, I would be long. Roblox, yeah, okay. I could be long term. CRW, crowd. There you go. Support. This was my earnings guess. Look at this. This was my earnings guess on it. Support at 160. It closed at 162. Downside pressure to 171 from wherever it was. So anyway, so it played out, even though in the after hours, I think it went the wrong way first. Sunshine Biopharma. Never heard of it. It's going to give me the ticker. GME. We can trade GME. It's no big deal. Shop. I would be long. I'm long via credit put spread. If it closes above 295 in 10 days, I'm fine. So I don't need a rally. I would make 20%. Let's see here. No call this week. I don't understand no call this week. Join me. I will look it up for you. You want me to call the week before it even starts? This is the action in Shopify. This was my call, and it did half the job, and the other half is ongoing. But you need to, so step 1, hold the floor. Step 2, maintain an ascending trend. Step 3, break out from the necklines. They took out one neckline right here, actually here. So that's done. They did the second one, and now the third one is in process. So the dip came. If they can hold this and come back up to here, they have a lot of work to do. There's a, I can do this again. There's a lot of chop to be had. So I can guarantee I am more confident in the floor holding than in the upside playing out soon. So Shopify, you need to be, if you're buying calls, you're either super risky and a gambler, or you have active trading facilities. So you can't buy a call and go to work and see if it worked. You can come back and be down 80% of your money, especially if it's a short dated call. So the easier one for somebody that has a full-time job is to sell a put spread out a couple of weeks and see if it crashes or not. You can check on it once a day. CLF, same thing. It's probably too high. I'll check in a second. Lucid. Okay, so I'm not a big fan of Lucid, the stock, yet, because it has no income yet. The car is awesome. Not for me, but it is awesome. Technology is whatever. The stock has made some progress. It has a wall with breakout opportunities, and it still hasn't broken out. I said this was a breakout opportunity, and I said this is a hiccup. Look at where they hiccup, just above my hiccup. And there was another potential hiccup that they haven't reached yet. So they can still, they're still doing this. If they come back to here, tough resistance, but they can break out. But a whole bunch of tough. I think I would not be long through the earnings, because I have a feeling they're going to come out with more bad news or delays in production or revision to the lower end of production. So the company is great. The car is great. They need to deliver on time. Yeah.
Just really quick, I was sending some emails to everybody who was emailing me. In the YouTube chat, we've got Lucid, SPRC, HIMX, and Apple.
2 of which I've never seen. So let's see. We can do Apple. We just did Lucid. So somebody's asking here, Walmart. So you had June 3rd, Walmart calls at 140. They expired worthless. I did not sell them. They died. They expired worthless. Whoever sold you those calls made money off you. So let's flip this equation on its head, and you start selling call spreads and put spreads so that somebody else can buy something and it expires worthless and you collect the money. That's the better way to win with options, the easier way to win. Now, you won't have a 10X, a double banger or whatever, 4 banger, but we do those during the day. If you are able to join us in the live room, we have plenty of those. But if you wanted to strategize and set a trade and go to work, selling spreads is the way to go in this environment. Selling naked puts in this environment is risky. I love it, but in this environment is risky. I'll give you an example. During the pandemic, when everybody was freaking out, the first wave down in February took AMD, I think, into the 40s. I sold puts in the 20s, low 20s. So somebody paid me $2,000, $2,200 to promise to buy their shares at $20. AMD. They paid me $2,200 to buy their shares at $20. I can't wait for that scenario to come back. Let's see. Iron conduit. It's iron condor. Yes, sure. I'd teach you. I came up with a couple new trades. I don't know what to call them yet. Let's see. What did I come up with? Iron calendars. I don't know. It just if you play around with risk in your favor and take advantage of overly exuberant retail traders. You win almost every time. So we'll have fun with it. I don't like to take unlimited risk, so I will try to keep everybody in check. The live room is open from anytime you want to pop into it. So nobody's going to be there tomorrow morning because I haven't shared the address yet. Tomorrow morning, I will share the link for the live room. I refresh it once a week at least. So we will gather around and start, the opportunity and discussions all day. Usually I need a good half hour to get a beat on the day, and then we'll start trading with confidence. So it's pretty fun. All right, Jonathan, I have to be off. I need to go do some things.
All right. Well, Nic, thank you so much, man. You covered so much today, from beginner stuff all the way up into how to combine those contracts into iron condors. And so everyone, show some love to Nic. If you're on YouTube, throw a like on the video so more people can see this. And we will see you tomorrow morning in the chat room, Nic. I'll stick around to show everybody where to find your content on Benzinga Pro.
Awesome. I appreciate your help there. Thanks for the support, you guys. That's great.
Absolutely. Thanks again. And yeah, welcome again, Carlos, Vinod, Don, Big Al. Let's see who else is here. Steven. I'm upgrading Arthur right now. So there's lots of new members. It looks like we still have 2 laptops left. So if you want that, be sure to take advantage of that sale in the description or in the chat. And I'm going to go ahead and share my screen. Let's see here. We got my screen open, sharing that. And then I'll bring down the checkout page really quick. So when you click on the link, it should look like this. And there's a coupon code pre-applied. And you want the one that says it's already, just for paying annually, it's 19% off. And then it brings it from $33.67 down to $16.83.50 for the whole year. You throw in your credit card or PayPal, buy now, and you're good to go. After you purchase, it should forward you to the Benzinga Pro website. And it usually looks like something like this when you first log in, except without all these extra tabs at the top. And you'll see that on the left side of my screen here, there's various chat rooms. So there are other chat rooms in here that do not include Nic and his trades and all that. There are chat rooms just for Benzinga Pro members. There's a couple different day trading and swing trading chat rooms. You want Benzinga Options Mentorship. So I'm zooming in some more here. You want to click on Benzinga Options Mentorship. That's going to be your home base every day for logging into the live trading room with Nic, seeing all of his swing trade posts. I have to zoom out here again. You can see that's where he posted the videos from today's charting session. So if you want to join now and get your homework done for the week, you still have a few hours to study tonight. And then if I scroll up here, I just want to show you what it looks like from Friday. Let's see, last Thursday. All right, this is from Thursday, but same point. So every single morning around, I think it's usually around 8:30, 8:45 a.m. Eastern. So that's at 5:30, 5:45 Pacific time. Nic posts in here and he gives you a quick update on the markets. And then right here, it says live session. So that's where you can click into his live trading room. If I click on that right now, no one's going to be in there, but I can join that meeting and then it loads up and then you can see Nic's screen in the morning or in the afternoon. And you can hear his voice just like he was teaching today with his voice, his charts. And then there's a live chat in there as well where everybody can ask questions and share trades. And then if you go down to today, that's also where you would find that grid, that spreadsheet for Sunday charts. He posts the videos, and then this is also where you find that link for all of his charts, all of his notes, and then different suggestions on how he might trade it. Like right here, DAL, he says range bound, iron condor perhaps, or on dips, sell credit put spreads. So I just grabbed that on random here, but you can see here how it seems to be trading within this range. And he said, oh, you know, this might be ripe for an iron condor, or on a dip, you could sell a credit put spread below. So again, that's how you would access the content. And all of this is available through our main website, pro.benzinga.com. So you're going to log into this website. In fact, I might even log out. And it's really zoomed in here. But this is what it looks like when you first log in. You click log in, and it skipped it for me, I think, because my browser was already remembering where I was at. What's going on here? There we go. Log in. And then it takes you to the main Benzinga Pro page. So what we didn't have time to cover today, I might even show you guys some of that stuff with unusual options activity, but we do have unusual options activity, news, scanners, charting, up to the second price movements, and other ideas here within Benzinga Pro. And let me just show you the calendar tool here. If I go to unusual options activity and then go to Friday, we could see some of those unusual options for Friday. So if you're looking for unusual options activity where institutions or hedge funds are buying up or selling specific contracts, I could say filter by trade value. And right here, we have an $8.2 million trade, $8.1 million trade on the corporate bond ETF. We have a $6.6 million trade on Alibaba Group. And you could dive deeper on that. You could filter by volume over open interest, the number of contracts, the total value of the trade. And we have a whole bunch of videos for you beginners on how to use this system, what to focus on, as well as you can talk to me or my team. That's what we're here for, to help you set everything up in the way that's best for you. Jason's asking, does he give his best trades? Is unusual option activity included? So yes, unusual option activity and everything else on Benzinga Pro is included with this promotion, Jason. So all of this, everything that you see in front of you, this is the highest tier subscription to Benzinga Pro. So all of this technology is included. And in terms of does he give his best trades, I assume you're talking about Nick. Yes, I will say he differentiates. He'll let you know whether or not he's taking a trade himself. Some of the really fast-paced stuff, he'll tell you, oh, you know, I'm not taking this personally, but if you want to, here are where the levels are at. Versus he'll also tell you if he's taking it himself. Great question. Let's see here. I'm bringing up the Zoom chat. Pay for regular subscription and this. Vinny, anyone who has questions about laptops, other subscriptions, shoot me an email and I'll sort it all out for you. We'll figure it out on the back end of the system and get you whatever the best deal is. Because yeah, so whatever the best deal is, I'll give that to you and we'll figure it out with laptops, price points, all that good stuff. Let's see here. Okay, Benzinga Pro. Yeah, so Benzinga Pro by itself, if I just go to pro.benzinga.com/pricing, there's something called the Essential Plan, which is the most popular one with real-time data. That's pretty much all the tools that I was showing you without Nick's program. Nick's program is called Options Mentorship. So if you purchase the Essential Plan already, I can just upgrade you to the Options Mentorship plan using this code tonight with your card on file or whatever payment method you want. So that's the difference there. There's the essential plan with the real-time data, advanced filtering, unusual options. Normally you'd have to pay extra for that, but it's included with the options mentorship plan. So let me know if you have more questions on that. Can we buy Nic's room only? Technically, Pat, the answer is yes, but it would cost, normally we charge more than this. So like you can buy Nic's room alone, but I think we're charging like 17 or 1800 bucks by itself on a separate website. So don't tell anyone. Okay. Awesome. Yeah, Vinny, I'll take care of, if you have duplicate subscriptions, I'll take care of your original one. Basics on options. Al, I feel you, man. If you're overwhelmed, which you probably are, just beginning with options, there's so much to learn, right? We have this great help site. Once you're inside of Benzinga Pro, you go to this question mark in the upper right corner here. And then you could just search for options. Options 101, definitions and uses, what is a spread? Or if you're on the main, like the front page here, you just scroll down to the bottom. And right here it says options, mentorship, video tutorials. So even though it says these are all written by my colleague Andrew, these are actually videos from Nic. So just like today he was showing you, well, what is a contract? What is a spread? How do you combine these into other things like iron condors, butterflies, or diagonals? Well, we have a lot of this stuff, just where to get started right here on the help site. So I'll go ahead and throw that into the chat. Or actually, yeah, you can access that through Benzinga Pro with this question mark in the upper right corner. It's kind of tiny on your screen, I bet, but you just click on that and you're good to go. Let's see here. Is the laptop still available? I'm still seeing 2. So no one has purchased, although I do have some requests. I might have to, there's some people, I'm going to do it first come, first serve. But if you, I don't know, emailed me or something, I'll try to get more, I guess. But it looks like no one else has purchased since the last time. So it's 2 left right now. So you can still get in. So yeah, do it now, Harishi. Don't wait. Make these guys in my email inbox sweat a little bit. Yeah, Dennis, are we grandfathered in at the 50% annually, or it renews after a year at full price? You're grandfathered in. So you would get that $1,683 rate. I'm not going to surprise you with a $3,400 bill next year. You would be grandfathered in. So do it now. Don't wait. All right. Cool. Just a few other things. So I think you guys get the point, right? It's not rocket science to come in here, open up a chat room, and go to the links that Nic posts here. One thing that is helpful is when you're in here, you can search just for Nic's posts. So you can search for him as an author. You can say at Nic Chahine and only see his posts. So that just makes it that much faster to see his items. So that might come in handy for some of you. And then Grant, do you say Nic has a 90% win rate? So when we didn't title this video that, but when we refer to a 90% win rate, his win rate probably is close to that. But we're talking about the delta on selling vertical spreads. So if you sell a spread and the delta is like 10% on the contract that you sell, then you have a theoretical 90% chance of winning. And of course, your stop you'd want to stop out if your chance of winning becomes much less than that. But that's really where, when we're talking about these statistics, the mathematical probability of you winning a trade, we're looking at levels, we're looking at price volume, and then we're just looking at what the delta is on those contracts. So he doesn't personally take every single trade, but in general, that's where that 90% number comes from. Matt, you gave me your email here privately, so I'm gonna let me just post my contact info here again for everyone. Posting that into both chats really quick. And I'm posting that link one more time so you guys don't have to scroll up really far. There. Okay. Okay. So so all this other stuff on Benzinga Pro, right? I actually have a full hour demo on how to use Benzinga Pro. So I'm not going to do that for you right now because so many people need my help in getting this set up. But what you can do is you could go to YouTube. In fact, I'll go to YouTube for you right now. I'll say how to use Benzinga Pro. And it's this one right here. And of course, it's an ad for Google-Fi. But basically, within 1 hour, it goes through all the tools. There are like a couple updates with the Ideas tool, and I think it covers a brand new scanner. But I'll throw that link in here as well. That is the link to our full hour demo. And then you can reach out to me or my team if we need to hop on a screen share. We can show you how to set up specific workspaces. All right. I hope you guys are pumped. I mean, this was an awesome session, just showing how, where to start, how to even think about options in general, and then really learning how to structure these things strategically together to leverage our buying power or our selling power while limiting risk. And then having Nic right there with you to guide you each step of the way is really, I can't overestimate how valuable it is. Just having someone that day in and day out, you can go and you can ask them about specific trades that you have. How do I fix this? And more importantly, how do I prevent losing, 75% on a trade? How do I make sure that I stick to my guns on my stop losses, things like that, to limit my risk? So I really hope that you guys got a lot out of this. It looks like there is still 2 laptops left. So yeah, if you didn't get in on that already, don't wait, because those will probably be gone in the next 10 minutes here, as soon as I clear out my email inbox. You guys have my email, my phone number. I'm right here in Detroit, Michigan at Benzinga HQ, so don't be strangers. And I look forward to talking soon. All right, thanks everybody. We'll be in touch. Big mover in the stock market. My name is Jonathan Mallard with Do you feel like you're always just a few minutes behind that big news item that could find that next big mover in the stock market? My name is Jonathan Mallard with Benzinga Pro Onboarding, and I want to show you today how to use Benzinga Pro to find big movers like today, KTTA. We had an exclusive headline that caused more than a 200% move. You can find news that causes moves like these along with a lot of other research tools on Benzinga Pro. So you can start your free trial today with no credit card required and follow along with me on this tutorial to learn how Benzinga Pro can give you an edge in your trading. There will be a link in the description below, or you can just go to pro.benzinga.com. So let's dive right into it and see what was going on in this situation. You'll see that here on Benzinga Pro, I have a mover scanner showing me my biggest gappers from this morning's pre-market session. That starts at 4 a.m. Eastern time. Then I have the news feed with exclusive news from Benzinga's editorial team that's only available to our users. Now, if I scroll down to 7:30 a.m. this morning, we can see that KTTA had an announcement about one of their products saying that it's been approved to provide esketamine nasal spray for the treatment of resistant depression in adults. So basically, they received approval for one of their products. That's good news because they can make money off of that product. And we can see on the 1 minute chart here that right at 7:30 a.m., the initial jump was from $2, around $2.15, and in the first minute, it was up to $2.68. But then you had all the way until 7:45. So that's 15 minutes to make that jump from $2.15 all the way up to around $6. Now, that's great if that's in the pre-market. If you were catching that from our news, definitely you could have found that on our exclusive news feed, or you could have found that on our scanner. I'm going to go through step by step how you can use some of these tools right now. And then towards the end of this presentation, I'll also show you how to get some combination workspaces just like this so that you can make it all work together perfectly. Let's get started. At the top here of the poll platform, you can see on the left-hand side, I have a navigation bar with all of my different tools. Or I can open up a new workspace by clicking on the plus button at the top of the platform. So I click on that plus button to open up a new workspace tab, and then I can start selecting different tools that I want to use on the platform. In this case, I want to open up the advanced newsfeed. Now, the advanced newsfeed is a great way to aggregate all the news across the market so you'll never miss anything. And we have a bunch of filtering capabilities so that you can narrow your focus and just focus on what's important to you. For example, we were talking about the exclusive news, and I can find Benzinga's exclusive news using the categories filter. So underneath the search bar here, I just click on categories, and we see that exclusives is automatically highlighted in red. I might also include hot, which are the biggest stories of the day, and market moving exclusives, which are just a little bit more bright and shiny. But as we could see, just the normal exclusive headline caused a huge move this morning. All right, so now I have all of Benzinga's exclusive news from today, and we see that news item from 7:30 a.m. before any press release came out that caused that 261% move. In addition to these, some of my favorite categories would be under analyst ratings. I like finding initiations and upgrades, especially on those smaller price per share stocks. I also like finding mergers and acquisitions. And notice how, as I'm checking these boxes, it's telling the system that I only want to see the news items with these types of tags. Then I have biotech and healthcare. Those are subcategories underneath the general category. And I highlighted these in the same color because they're related to each other. So I can just click and drag this rainbow colored bar on the right-hand side. So I'll make those both of that blue color. Then finally, we have the news category with some great subcategories. At the top here, I have asset sales, buybacks, and contracts, FDA for those biotech stocks, and then rumors. There's a lot more on here that I didn't include. Like you'll see here under news, you have dividends, earnings, econ numbers, insider trades, management, offerings, which includes secondary offerings, stock splits. There's anything that you could want is inside of this news feed. But for right now, I click done in the bottom right corner. And now I have this filtered news feed that's only showing me the news that's most important to me that I know for sure every day these types of news items are going to move the market. That's my first and probably favorite way to filter the news feed so I can go upstream of the volatility and go straight to the source so I can get in on those trades before anyone else. You can see here, Omnicom is just up 1%. Qualigen up 31% since that was published. Aura up 2.93%. So a lot of these are bullish catalysts here today. And then, of course, you could filter for negative catalysts as well. Also, notice how some of these have sentiment indicators, these little green arrows saying, hey, you might want to pay attention to this. Based off of our news desk experience, this is more likely to positively or negatively impact the price of the stock. And then lastly here, the color of the ticker is indicating the price action since the previous close. So that's not necessarily the same as the sentiment for that news item. It's just saying the price is up or down since the previous trading day. All right, so I hope those categories gave you a good place to start. If you're a beginner and you're just looking for news that's going to move the price of a stock, I would say give these categories a try and you could expand or contract your selections from there. The next thing that I want to point out that really makes this the advanced news feed is the screener filter, because you don't have to look at all the news on the entire market. That can be very overwhelming. But what you can do on Benzinga Pro is you could say, all right, I only want to see news from $2 to $20 stocks. And I only want to see stocks that have an average volume of at least 1 million shares traded per day. I click done, and then it'll show me only news on those types of stocks. This is great for cutting through the noise, and you can filter this by technical or fundamental parameters on the screener filter. I could also say, oh, maybe I'm looking for low float stocks, and I could go to share float and set a maximum of 10 million shares available to be traded. I'll get rid of some of these other filters, click done. So now I'm only looking at low float stocks from $2 to $20. So that is really what makes the advanced newsfeed advanced, is having that screener filter so you don't have to waste your time reading news items that you don't care about. Lastly here, we have watch lists. You can see I already have some watch lists built in my watch list tool. I'll show you how to do that in a few minutes here. But if I just want to see news only on those companies in one of these watch lists, I just check that box and it limits my news to those companies. Then I click done and I'm all set. Now notice how I have my watch list filter and my screener filter. So I might have to take away these screener filters if I want all of the news on my watch list. The last thing I want to say about the news feed here is the speed. I'm sure you're asking, well, why would I pay for this news when I can just watch CNBC, Yahoo Finance, or Google something? Well, this news is going to be light years faster than most other free news sources or paid news sources, but there are a few nuances that I want to point out. First of all, you'll see on the right-hand side here, all of these items say BZ Wire. That's our curated news source straight from our news desk, and these are manually typed headlines. You can see here top 10 Wall Street bet stocks since market open. So if you want to follow the Wall Street bet stocks, they're right there on a daily article. And it's great because they can highlight key data points from earnings or just consolidate, what to pay attention to so you don't have to filter through a bunch of press releases and SEC filings.
That being said, if you want the fastest possible news, then you want to go to sources in the upper left corner here. Click on sources, and then you can see the default source is Benzinga Wire, but then you can click on press releases. Now I have press releases highlighted in brown because I think brown, paper, and it just helps me to differentiate between the different sources. But if I click done, then we can see that it's going to show me the press releases in addition to Benzinga Wire. And many times when companies release information through a press release, when it's not an exclusive news item like we had this morning on KTTR, then that is the fastest way to get that information. So just to recap here, like if I go over to my filtered news feed, I have those same categories that I selected earlier. Before I was only using Benzinga Wire, but I can add in the press releases as well. So I click done there. And now I only have press releases that are auto tagged by our AI system with things like mergers and acquisitions, FDA approvals, contracts, things that will really move the market. And then, all right, so that really wraps up the newsfeed tool. And now I want to go on to our next tool, which is the details tool, because there's a lot that you can do to research one single stock within Benzinga Pro. And on the details tool, you have your charts, your news, your fundamentals, your calendar, all there in one place. So it'll save you a lot of research time to do your due diligence. So we open up the details tool. It's the third item in the upper left corner. And we can see here, open up to Apple. It gives me a brief overview chart. I've got some key data points. If the screen is smaller, like if I open up a second tool here, you'll notice, well, where did the key data points go? If you scroll down, they'll be underneath the news section. So just so you know. But if I want to do some more advanced charting work, notice how there are these different tabs underneath the price quote at the top. I can click on that chart tab, and this gives me a more advanced chart with the functions of trading view and Benzinga's data. So I could switch this over to a 1 minute chart. I could add indicators here. Like I could say add RSI. I could add VWAP. Moving averages, all that good stuff. You can add more than, as many indicators as you want on here, over 10 indicators. And this is all real-time data. So this is really up to the second data. If you have this set on a minute candle, you can even see the candle moving every second or two here. So it's really great for day trading purposes. And then you have your drawing tools over here on the left. So if I just wanted to map out some support and resistance levels or do Fibonacci retracement, I could say just, draw that line on there. And then with all of these drawings, you can also change the colors, the thickness, things like that. Now, if I want to use these same indicators across multiple companies, like let's say I'm looking at Apple right now, I've got VWAP and RSI pulled up. I could switch over to, say, Ford, and it's going to keep those same indicators. And then if I go back to Apple, it's going to have the same drawing that I left on there before. We're still developing the ability to save indicator settings. So you can't just click on a drop-down menu, but as long as you don't close this tool, it will save those settings. A caveat, though, is that if you open up a new tool, open up the chart, then it's not going to have those same indicators. So you would have to have that set up for each individual tool. But you can have up to 4 tools open in each workspace. So that is the chart. It's great. You could set this for like 1 day, 1 minute, whatever time frame you want, and then you've got all your drawings and indicators and everything on there. Now I want to hop back over here to the news tab, because this news tab is really great if you just want to see immediately what types of news are causing that stock to move. Sometimes you'll even get a blue box here at the top saying why is it moving, and then you can immediately see why those biggest movers are being volatile. Then we have the calendar tab where you can see past earnings. Notice how there are sub tabs underneath here for things like dividends, guidance, IPOs, analyst ratings. So you can do all of your research there in one place. This is very similar to our calendar tool, which we'll cover next, but just focused on one single stock. Then you have your financials, where you could look at the balance sheet, income statement, cash flow statement. By the way, this is all downloadable. So you could do your discounted cash flow analysis on an Excel file if you want to. All the research that you need to do for swing trades or longer term positions. Then we have the peers tab, where you can compare the price movement and some other key data points compared to other companies that have similar characteristics. Maybe it's in the same sector, or maybe it shares some financial characteristics. That can be really great if you have a thesis and you know of one company that meets your thesis requirements, but you want to see what some competitors would be doing with that same idea. So it's just great for doing research. Then you have insider trades, where insiders are buying or selling shares of the stock or options on the stock, and you can see immediately what's going on with those insider trades. Finally, we have key data points, which are also available on the overview tab, but you can just take a quick look at some of those key data points. So the real power here is that you can use this by itself, the details tool on Benzinga Pro, or if you're clicking through other things on the platform, like if I went to the news feed and I noticed something that was important to me, I could just click on that news item and it will immediately bring up the details tool, so I can do all the rest of my research and make quick decisions, not waste time clicking on a bunch of different browser tabs. And it's just great to have that all available in one spot. Next up is the calendar tool. And by the way, if you're still listening to this video and you didn't already start your free trial, I know this is a lot of information, but that's what I'm here for. That's what my team is here for. So go ahead and start your free trial at pro.benzinga.com. And there's this little blue bubble here in the bottom right corner. I do live office hour sessions, so I can help you set up your custom workspace or explain any other answers to questions that you may have. So just go ahead, start that at pro.benzinga.com, and the link is in the description below. Next up is the calendar tool. The calendar tool is fantastic for doing research on a variety of data points. You can do historical research, and it's all about giving you a nice, clean table format with some great filters so you can get very specific about what you're looking for. Now, you'll see that the default here is to open up the earnings calendar, so I can see all the companies that are announcing earnings today. I could also look into the future. So on the calendar tool, for the appropriate data points, I could click on, say, the 26th, and I could see, okay, here are all the companies that are announcing earnings later this week. So that way I could even make a watch list of these companies. Like if I just say Control C, open up a watch list, I'll make up a new watch list. I'll just say earnings, great watch list, and then I can just paste right into that watch list. So I just use this calendar to make a watch list, and then I'll show you a little bit later how you can then filter your other tools by those watch lists. Or if you were watching earlier in this video, I did filter the news feed by a watch list. All right, back to the calendar tool. So I can see what's coming up in the future for earnings, or I can click on this drop-down menu, and we actually have 14 different calendars, from analyst ratings to conference calls, FDA calendar, unusual options activity there at the bottom, And one of my favorites is actually analyst ratings. So I have to change the date range back here to the present time because we don't know what the ratings will be in the future. And just for example, if I wanted to see all of the initiations for today, I could do that on my news feed, which I showed you earlier, or right here, I could click on filters on the right-hand side, then go to action on security. I'll deselect all of these by unchecking that box, and then I can click initiates coverage on. So these are all the initiations from today. There's a lot today. And then I could also say I only want to see the initiations with a positive rating. So I could layer that with the ratings, and I could deselect all of these except for buy, outperform, overweight. That's good. And then you could change it by price target. There's all sorts of things you can do here, but I really love initiations and upgrades, especially in the pre-market on smaller price per share stocks. Then we can click down to the unusual options activity calendar. I'm sure some of you are here just wondering, how can I use Benzinga Pro to find unusual options activity? And that data goes straight into the calendar tool. And one way that you can filter this down is, say, by the total trade price. So I could just click on total trade price, click on it again, and I'm filtering to see the largest trades at the top. So I can see here Wayfair has a $2.5 million put order, and then I can filter by other things as well. Like I could go down to volume over open interest, say greater than 0.1. And now I know that I'm only looking at trades where that one single order has at least 1/10 as many contracts as have been traded over the entire lifetime of that contract. And then lastly here, I'm going to use trade count. So trade count is where you have a really big order, but you have to use multiple market makers to get those contracts executed. So I'm going to say trade count greater than 12. So they had to use at least 12 different routes or market makers to get that completed. And now I'm going to sort by symbol. So I can immediately see where these are all orders. Oh, I didn't filter by trade price yet. I'll filter by trade price as well. Say greater than 99,000. There we go. So these are all at least $100,000 orders, significant volume spike, significant trade count, or what we call a sweep. And now I can start to look where possibly institutions could be doubling or tripling down on their bullish or bearish bets in the same direction. I'm also going to click on columns here and add in sentiment because I want to include that sentiment column over next to those puts and calls so we can see where they are buying or selling those puts and calls. So I could just scroll down here and, for example, I can see 1217. Let's see, are those the same? Let's see, put bearish. What's going on with ProShares Bitcoin Strategy ETF? So I can see here that there were bearish put sweeps, so they're buying puts on BITO. Now the expiration date here, a couple of these are for January. Another one is for September of next year. So these are pretty far out. The January is for a year out. But still at $65 right now, these are it's at $36. So that's interesting. And you can see that they spent over $2 million under total trade price on these puts. So this is just one leg of the trade. You don't see a whole lot more of, if they own any shares of that equity, or if there are other legs to that trade. That is something to be aware of. But if you want to know more about how to use these unusual options to find some great swing trades, I recommend checking out our unusual options activity webinar on our help site. So inside of this tool on Benzinga Pro, you can just click on the help button in the upper right corner, and that's going to take you to our help site. And if you just scroll down on the help site, you'll see strategy outlines. You can click on that, and we have an unusual options activity strategy, analyst rating stock picks, buying the dip, and a simple gap and go. So if you want to know more about unusual options, just go there and click on unusual options activity strategy. Or if you're brand new and you're just exploring, how do I even start to think about day trading? Use that simple gap and go strategy. And I'll show you a little bit later on in this video how to set up for that strategy. So I don't think we have to go through all of these calendars today. That would take a little bit of time. But like I said, you've got conference calls in here, so you can click right into those. You have dividends, earnings, FDA really comes in handy, econ numbers from across the world, and you can filter those by importance as well. So this is really a fantastic tool. I think it's really quite underutilized just because we're more known for the speed of our news and real-time filtering, but it's really great for doing research as well. All right, next up is the watch list tool. So I'm going to open up a new workspace here, and I briefly opened it earlier, but this tool is very simple. You're just adding security names by typing them into the search bar at the top, or copying and pasting a list of securities into that search bar at the top. Also, if you have a big watch list that you've downloaded from your brokerage or some other source, you can upload that list through our import watch list feature. You can have up to 500 tickers inside of one watch list at a time. Then once you have it in here, then you can set alerts for that watch list. I just click on this bell symbol in the upper right corner and then click on sound alerts to turn on a sound alert for each time there's a new news item on one of those companies. Or I can click on these toggle switches to activate real-time email alerts for every new news item. Then you can also take notes on these companies. So you can remember why you were paying attention to them, if there were any news items that you wanted to keep track of. And I really like even dragging this note section over next to the price, because if I did track price levels, like here, it looks like I had WBX with some price levels. I was looking at 1554, 2294, and 3024. And back in October, there was a big news item on the Uber partnership. So it looks like I was looking for maybe a breakout there on WBX. And I could click on that to see, oh, you know, what's happening these days. Maybe I just click on the 3-month chart or the main charting tab to see, okay, that's why I was looking at those other levels, because of that huge move when they announced that Uber partnership. And then you can select from a whole list of different watch lists here. You could create a new watch list or delete a watch list, like I'm deleting this one. And then, of course, you can filter all of your other tools by those watch lists. For example, I forgot to mention on the calendar tool, there's a watch list button. So I could say I only want to see earnings results for one of these watch lists. I click done, and it's not showing anything because none of those companies are announcing earnings today. Pretty simple, right? So let us know if you have any questions, but that is the watch list tool. Next up is the movers tool. This is the first of 3 types of scanners on Benzinga Pro, and it is the most simple and easy to use. If I had to describe the movers tool, it would be simplicity and beauty and simplicity, because it is so easy to find those gappers and just very quickly cycle through charts or news items that are causing that volatility. So I open up the movers tool, and this is going to be the same setting that you use for the simple gap and go strategy later. So I'm clicking on gainers, and then I'm clicking on pre-market and the entire session. So that's going to show me the percent change since the previous trading day at 4 p.m. And then if you want to filter by sectors or market cap or price per share, you can do that. I'm just clicking on this blue bar at the top to collapse those filters so I have access to all the big movers. And there, we started this presentation today with KTTA, and that was our top gainer from this morning. You can see it's moved another additional 50% here from 171 up to 219, in the regular trading session. But I could just go real quick and just look through all of these, either from the news side, if I click on the news tab on the details tool, or on the charting side, just to see if I like what I'm looking at and if I want to pay attention to that later in the trading day or for a potential trade right away. This is, by the way, this is how I came up with those favorite news categories on the newsfeed tool, because I would click through 15 or 20 of these every single day and pay attention to the news items. And then I realized, okay, what are the category tags that are causing these big outsized moves? So if we go to KTTA, I can scroll down and I can see, oh, this was from our exclusive news item where it says exclusives here. Maybe I should pay attention to exclusives on my newsfeed. Or what's another one? Aptivo Therapeutics. And then it looks like that was from Access Wire. And this was a press release, but we probably have a follow-up article. Let's see, BZ Wire. So this was tagged with biotech and FDA. That's why I always have biotech and FDA categories highlighted on my newsfeed. So this is a great way to learn how to trade off the news, find your gappers that you want to pay attention to in the morning, and cycle through those charts very efficiently to do your research. Of course, you could, get this down to a 5-minute interval if you're just looking for stocks that are moving in the past 5 minutes. Just so you know, it does refresh every 60 seconds. And that's really why we came out with our new scanner tool, which we'll get to next, because if you don't want to wait a full minute, well, our scanner tool will update every single tick across the entire market. So let's go ahead and open up the scanner tool. Okay, here on the scanner tool, this is the best way to find breakouts across the entire market for specific technical or fundamental parameters. What I mean by that is that with 2 clicks here on the scanner tool, I could click on presets, and then I could click on 5-minute movers to find stocks over 2 billion market cap that are moving more than 2% in the past 5 minutes. So it's not showing me any results right now, but if I get rid of that market cap filter, we can see we have all of these smaller cap stocks moving at least 2% over the past 5 minutes. Then you could go into the price filters here. You can see you have a whole host of different filters available. One of my favorites is RVOL, relative volume for short-term volatility. And what's interesting about this one in particular is it's just comparing the volume in the past 5 minutes of trading. So the number of shares that have been traded in the past 5 minutes compared to the average for that same 5-minute period across the past 10 trading sessions. So that's pre-market or regular hours or after hours. That way you don't have to kind of guesstimate the whole day relative volume. It's specific to the past 5 minutes. So for example, I could say RVOL 1.25 to say I want to see at least a 25% increase in volume in the past 5 minutes compared to the average for that period over the past 10 trading sessions. You can basically use this like the movers tool as well if you just clicked on overall gainers, just with additional columns and filters that are available. And then lastly, if you want to change the columns that show up, like I could go to columns here at the top, and let's say I want to include share flow, or maybe I want to include change percent in the past 60 seconds. I can click OK, and then those will be included in my table. So in this case, I'm actually looking at the top percent change in the past 60 seconds, and that's another value add of the scanner tool as opposed to the movers tool. So this is just a great way to find stocks that are taking off right away. Let's say even if you miss the news item, or maybe there's no news at all. Maybe it's just from Reddit or some chat room or a press release that traders are circulating. This is a great way to make sure you don't miss out on any of those big moves. One last thing I want to add here is that you can differentiate between stocks that are taking off after they've been making a positive move, or you could look for stocks that are making a bounce. For example, in this case, I might want to say that I could filter here. If I click on filters, and then I could say change percent 1 minute, a minimum of 0.5, and then also change percent from the open, also 0.5. So that way I know it's not down for the day and then bouncing. I want to see a positive move from the open and in the past 60 seconds. And that gives me just one example here that I could take a quick look at and see, why is that stock moving in the past 60 seconds. So hopefully this will help you find those breakouts right away as quickly as possible so that you can get an edge in your trading. The next and final scanner is called the signals tool. The signals tool looks like that radio tower on the left-hand side. And this is great for finding momentum or institutional activity signals that can give you a real pulse for what's going on in the market or in a particular watch list or sector. This starts off with our price spike, where you can see that it's spiking more than 2%, or more than 1% within a 1 minute period. And it's just that chronological list saying this is spiking right now, so I can take immediate action. And you can see there's a lot of information here. So sometimes I do feel like it's reading the matrix, but if you're knowing what you're looking for, then it can be very helpful. Or I could click on filters here at the top, add a filter, and I could filter for one of those watch lists that I created earlier, like movers from yesterday. So now I'm only looking at price spikes on stocks that were big movers from yesterday. And then I can go back to signals and add in things like option activity, block trades, halts and resumes, opening gaps, and then highs and lows. You can choose from 52-week highs and lows, day series where it's continuing to move in the same direction, or session highs and session lows. So this way I'm getting all of that movement, all of that information in one place. I'm just getting rid of a few of these so you can see what the trading halts look like, or the opening gaps there on that watch list, as well as those highs and lows. And then I could turn on notifications with a desktop notification, a sound alert, or a synthesized voice alert. This is going to be in my day trading workspace when we get to that, where I would combine this with my scanner tool and my advanced news feed so that I never miss a stock that is taking off or that has significant institutional activity. All right, thanks for sticking with me here. We're almost done with the tool overviews. You've been doing great if you're still with me. Again, I want to just remind you, start your free trial at pro.benzinga.com and smash that like button so that we can help more people learn how to use Benzinga Pro and improve their trading. Also, don't forget that once you start your trial, you can always reach out to our team for personal assistance at this blue bubble in the bottom right corner. Click send us a message, or you can just reach out to my team directly at onboarding@benzinga.com. All right, let's do this. Let's click on the squawk. So you'll see here, and by the way, I'm skipping over the screener tool because that's basically being replaced by our scanner. So all of those same variables, I mean, I guess I'm talking about it now, but all the